97. Look into page number 97. So we have completed so far 4 sections in input tax credit. That is section 41, manner of availment of ITC. Section 49, subsection 5, manner of utilization of ITC. Then section 16, conditions for availment of ITC. Section 17, input tax credit in like apportionment of credit and block credits. Section 18 we are going to discuss, that is input tax credit in special cases. In that, section 18 subsection 1 talks about availment of ITC on closing stock. There are total 4 situations in 18 subsection 1. In these 4 situations, we will take ITC on closing stock. What are those 4 situations? 18(1)(a), a person is liable to get registered and they made application for registration within 30 days. 18(1)(b), voluntarily a person is getting registered. 18(1)(c), registered person migrated from composition scheme to normal scheme. 18(1)(d), registered person's outward supply which was exempted, now it became taxable. Now try to understand, I am little bit explaining these situations in detail. That is, previously I was not registered. When I was not registered, so I would have made some purchases. Now I am liable to get registered. So now I am making application for registration. Before the date I am liable to get registered, I have got some closing stock. On that closing stock, I would have paid GST but not taken ITC. So now I can take that ITC. So therefore, a person is liable to get registered and they made application for registration within 30 days. Now before the date they are liable to get registered, there is some closing stock. What is that closing stock? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. So on these inputs in WIP, inputs in FG, whatever GST is paid, that GST paid can be availed as ITC. So which date closing stock we need to check? Immediately before the date the person is liable to get registered. Say, for example, I commence a business on 25th of May, I commenced business. And when I commenced business on this date, I am not liable to get registered. As and when my aggregate turnover exceeds threshold limit, I need to register. Say, my aggregate turnover exceeded threshold limit on 110. Aggregate turnover exceeded threshold limit. Aggregate turnover exceeded threshold limit on 110. And therefore, on this date, I am liable to get registered. But during this time, that is from 2510 to 110, I would have made some purchases. On that purchases, whatever GST paid, I can take as ITC. But not on all purchases. Now we need to see the closing stock date. What is the closing stock date? 39. So 39. Before the date I am liable to get registered. What is the date I am liable to get registered? 110. Before the date. What is before the date? 39. As on 39, I need to see what is the inputs. And I need to see what is the WIP that I have on 39. Then what is the FG? In this WIP, there will be some inputs content. Okay, that inputs. On this FG also, there will be some inputs content. So, this inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. On these 3 inputs, whatever GST I paid, I can avail as ITC. Is it clear or not? And for this, whether any matching is required? No, matching is not required. Matching is not required. But they have given one condition. As per section 18 subsection 2, so this inputs as such held in stock, inputs in WIP, inputs in FG, I should have purchased within 1 year prior to closing stock date. What is the closing stock date? 39. Means the invoice date of these inputs to the closing stock, it should be within 1 year. So therefore, within 1 year prior, I should have purchased these inputs, which means if I purchased it 2 years, 3 years before, which is in the closing stock, like obsolete stock or old stock, on that I cannot take. So it should have been purchased within 1 year prior. On that GST paid, I can take as ITC. Generally, we will avail ITC in which statement? GSTR 3B. But this ITC, we will not avail in 3B. So for that, we need to file one separate form, that is Form GST ITC 1. So we need to avail this ITC by filing ITC 1. A separate form is there. That form we need to file. What is the time limit within which we need to file? Within 30 days or such extended time by the commissioner. So when are we getting registered? After exceeding threshold limit, we make application for registration. What is the time limit within which we need to make application for registration? See the heading. So a registered person make application for registration within 30 days. Then only this 18(1)(a) will be applicable. So therefore, what is the time limit by which I need to make application for registration? Application for registration within 30 days. Within 30 days. So say I made application for registration on 25th of October, and thereafter I got the registration certificate on say 31st October. Now after I get the registration certificate, again within 30 days, I need to file one form. What is that? ITC 1 to avail the ITC on the closing stock. Okay. So what is the time limit by which ITC 1 should be filed? Come on. Within 30 days after registration. Within 30 days after registration, I need to make application for availment of ITC in one form. What is that form? Form GST ITC 1. That form should be certified by a chartered accountant or a cost accountant. If the ITC claim exceeds 2 lakhs, means up to 2 lakhs, self-declaration, no need to certify. But after crossing 2 lakhs, that form should be certified by a CSCMA that yes, this particular ITC what they are availing is genuine, like that. Which means up to 2 lakhs, by like default, it is like a gift from the government to us, correct? 2 lakhs, no need of any CSCMA certification, means we will declare. So newly started business, whether we have really inputs or not, up to 2 lakhs, happily we can enjoy the ITC. And suppose if you want more than that, then only we need to go to CRCMA. So therefore, this is actually like a jackpot, because we don't have to even matching not required. So now only I am getting registered. So I will say that I have purchased some inputs on the GST paid. So somewhere 1,90,000 or 1,95,000, I will for ITC 1, I will get that money. What I can do with that money? I can set off with my liability. Are you understanding this here? And this form should be certified by CSCMA only if the claim of ITC exceeds 2 lakhs. Then this is first situation. 18(1)(a). What is 18(1)(a)? A person is liable to get registered and they make application for registration within 30 days. 18(1)(b). 18(1)(b) is a person voluntarily getting registered. So that is, I am not liable to get registered, but I am voluntarily getting registered. Now, from when I am required to pay GST? From the date I get certificate of registration. So, before the date I get certificate of registration, whether I would have taken ITC on the goods purchased? No, because only a registered person can avail ITC, correct or not? So therefore, before the date of registration, whatever is the closing stock, on that closing stock, GST paid can be availed as ITC. Say this, a person voluntarily get registered, they can take ITC on inputs in stock, inputs in WIP, inputs in FG, and here also matching not required. Which date closing stock should be taken? Immediately before the date of registration. What is the difference between 18(1)(a) and 1B? 18(1)(a) and 1B. 1A liable to get registered and make application for registration within 30 days. 1B voluntarily getting registered. Both in 1A, 1B, we will take ITC on same, correct? Inputs are such held in stock, inputs in WIP, inputs in FG. Matching required or not required? Not required. which date closing stock should be taken in case of 18(1)(a? Before the date they are liable to get registered. 18(1)(b), before the date they get the certificate of registration. Then, in case of 18(1)(c) and 18(1)(d), there is a registered person who migrated from composition scheme to normal scheme. Remember, C for composition scheme, 18(1)(c). So, composition scheme to normal scheme. I am under composition scheme. When I am under composition scheme, I cannot take ITC on closing stock. Say, for example, on 1/11, I am migrating from composition scheme to normal scheme. Composition scheme to normal scheme. So when I was under composition scheme, I would not have taken ITC. Now I have some closing stock. Which date closing stock I need to see? 31/10. As on 31/10, again I need to take inputs as such held in stock, inputs in WIP held in stock, and inputs in FG. Not only that, even on capital goods also I can take ITC. So what is the advantage in 18(1)(c) over 18(1)(a)(1)(b)? In 1(a)(1)(b), I can take only ITC on inputs. But in case of 1(c), I can take ITC on even capital goods. Okay. And matching is required or matching is not required? Matching is required. Unfortunately, matching is required. Which means whatever ITC that I am taking should be reported by supplier in their GSTR1. So, inputs in stock, inputs in WIP in stock, inputs in FG in stock, and even on capital goods. But on capital goods, full ITC, full GST paid cannot be availed as ITC. So, we need to give a depreciation. What is a depreciation? See, capital goods we would have purchased like 6 months before or 8 months before. So, definitely the value of the capital goods will come down. Na? So, that's why full ITC, full GST paid cannot be taken as ITC. We need to reduce. How much we need to reduce? 5% for every quarter or part thereof. In case of capital goods, ITC shall be GST paid minus 5% for every quarter or part thereof from the date of purchase till the date of conversion. Understood? For example, I purchased capital goods on 20th May. So, therefore, how much I need to reduce from 20th May to 31/10? From 20th May to 31/10. How many quarters? So, take calendar quarter. May will come in which quarter? April, May, June. First quarter, April, May, June. Then again July, August, September. And October, few days. So, therefore, how many quarters? 3 quarters. So, therefore, how much I need to reduce? 15%. Correct? 5% for every quarter or part thereof. Say, I purchase the capital goods for 10 lakhs plus GST 18%. Then, how much is the GST paid on capital goods? 1,80,000. From 1,80,000, I need to reduce 15%. Remaining amount I can avail as ITC. For input, should we do like this? For input, should we do like this? No, inputs fully GST paid you can take. Only for capital goods we need to reduce 5% for every quarter or part thereof from the date of purchase till the date of conversion. Understood or not? Then 18(1)(c) is inputs in stock, inputs in WIP, inputs in FG capital goods before the date of conversion. Should this capital goods also be purchased within 1 year prior? Yes. This 18 subsection to time limit is common for both inputs and capital goods, which means even those inputs should have been purchased within 1 year prior. Capital goods should also be purchased within 1 year prior. Is the capital goods purchased within 1 year prior to the closing stock date? Yes. So, we can take the ITC. Then 18(1)(d) you see. 18(1)(d) is a registered person who is making exempted supplies. So, when he was making exempted supplies, can he take ITC? No. Now, he started making taxable supplies, means the exempted supplies became taxable. Now, can he take ITC? Yes. So, on the closing stock before the date of conversion, same as 18(1)(c). That is inputs as such held in stock, inputs in WIP, inputs in FG capital goods. Which date? Before the date of conversion. From where to where? Exempted supplies to taxable supplies. So, what is the difference between 18(1)(c) and 1)(d)? situation is different. 18(1)(c) composition scheme to normal scheme. 18(1)(d) exempted supplies to taxable supplies. And both cases closing stock is same. And both cases matching is required. And in both cases before the date of conversion. Now what is the difference between 18(1)(a)(1)(b) versus 18(1)(c)(1)(d)? 1(a)(1)(b) versus 1(c)(1)(d). 1(a)(1)(b) we cannot take ITC on. 1(c)(1)(d) we can take ITC on capital goods. After reducing 5% for every quarter or part thereof from the date of purchase till the date of conversion. And one more difference is also there between 1(a)(1)(b) versus 1(c)(1)(d). Matching is required. 1(a)(1)(b) matching is required. 1(c)(1)(d) matching is not required. And one more difference, matching is not required in case of 1(a)(1)(b) and required in case of 1(c)(1)(d). Yet another difference is there. 1(a)(1)(b) capital goods we have seen, matching point we have seen. One more point, in 1(a)(1)(b) now only we are getting registered, but in 1(c)(1)(d) already they are registered. So that is about this. And in all these four cases, what is the time limit? 1 year prior to the date of closing stock. And ITC with respect to GST paid on inputs can be availed as ITC, no need to reduce 5%. But in case of capital goods, we need to reduce 5% for every quarter or part thereof from the date of purchase till the date of conversion. And to take this ITC in all these four cases, they need to file a declaration in ITC 1. And that ITC 1 should be filed within 30 days from the date they are eligible. In case of 18(1)(a)(1)(b), from the date they get registration certificate. In 18(1)(c)(1)(d), from the date of conversion within 30 days. And suppose if the claim exceeds 2 lakhs, that should be certified by CA or CMA. Then, next one, transfer of ITC, 18 subsection 3. Whenever there is transfer of business with specific provision for transfer of liabilities. Say, I am having a business and that business you have taken over. So therefore, in case of takeover, either merger, amalgamation, whatever it may be, in case of takeover of business, from the transfer or electronic credit ledger, the unutilized ITC will be moving to the transferee's electronic credit ledger. For example, A Limited is taken over by B Limited. Now in A Limited, some credit will be there in electronic credit ledger. That will be moving to the B Limited's ITC. Got it? But only one condition, pa. This transfer of business should be with specific provision for transfer of liabilities. Means only assets should be transferred, both assets and liabilities should be transferred. Both assets and liabilities should be transferred. And to transfer this ITC, what is the form that is required? ITC 2. ITC 2. So transferor should file this form ITC 2 for transfer of this ITC. Whether a CA/CMA certificate is required in this case, yes. But whether that CA/CMA certificate required only when the amount exceeds 2 lakhs or irrespective of the ITC? Irrespective of the ITC. What should they certify? That CA/CMA should certify that this transfer of business is with transfer of both assets and liabilities. So these assets and liabilities will come into picture only in case of amalgamation in the nature of merger. It should not be amalgamation in the nature of purchase. It should be amalgamation in the nature of merger. So all assets and liabilities should be transferred. Understood or not? Then in case of demerger, what will happen is that from one entity, we are now getting two entities. So for example, if A Limited and B Limited gets merged into AB Limited, no issue. A Limited will file one ITC2 to transfer the ITC, correct? Same way B Limited will file one ITC2 to transfer the ITC. So easy. But when AB Limited, one company is divided into A Limited and B Limited, then how the ITC can be transferred? Here AB Limited is having some ITC. It should be transferred to A Limited and B Limited. So in what ratio it should be transferred? We need to take the assets ratio. We need to take the assets ratio of A Limited, B Limited. So assets ratio of A Limited is 40 crores and assets ratio of B Limited is, assets of B Limited is 60 crores. Then in 4:6 or 2:3 ratio, the ITC should be transferred. say for example 1 lakh is the ITC, so to A limited it will be 2 by 5 and B limited it will be 3 by 5, that will be transferred. Understood? So therefore in case of demerger, how the ITC will be transferred, on what basis? Assets ratio, and whether we need to take total assets or assets on which ITC is availed, total assets. Whether ITC availed or not on such assets, total assets we need to take for the purpose of the ratio. And post demerger, transfer or change in ownership will also include transfer or change in ownership due to death of sole proprietor. For example, there is a sole proprietor who is dead and his son has taken over the business. In that case also, from father to son, whether ITC will be transferred? Yes, same 18 subsection 3. Then this 18 subsection 3 is also applicable in one more situation. That is, within the state, there is only single registration with respect to multiple places of business. Say for example, I have business in 3 places within the state: Chennai, Madurai and Salem. So in 3 places I have place of business. But for all these 3 places put together, I have only single GSTIN. Okay. Because it is optional, na, whether to go for separate registration or continue with single registration. So I was having single registration. Now it is split into 3 registrations. Okay. Now I got separate registration. So one GSTIN, then second GSTIN and third GSTIN. Now so far I was having only one GSTIN and I was having this ITC under this GSTIN. Now that ITC needs to be shifted to these 3 registrations. In what ratio the ITC will be transferred? Again, assets ratio. Assets ratio of Chennai, assets ratio of Madurai is to assets ratio of Salem. In that ratio, I need to distribute. For this, the form will be different, ITC 2. And here we don't need CACMA certification. Okay? Where a single registration gets converted into multiple registrations within the state, then also ITC against a single registration can be distributed to multiple registrations by filing ITC 2A. And we need to take assets ratio on the date of new registration. Now, what are the 3 forms that we have come across so far? ITC 1, availment of ITC on closing stock. ITC 2, transfer of ITC on account of transfer of business. ITC 2A, transfer of ITC on account of single registration getting separated into multiple registrations. ITC 1, should it be certified by CACMA? Yes, if ITC amount exceeds 2 lakhs. ITC 2, should it be certified by CACMA? Yes, always. ITC 2A, should it be certified by CRCMA? No, not required. Then look into this. So before demerger, so assets of XYZ Limited and ITC of XYZ Limited. Now post demerger, so XYZ Limited is demerged into ABC and XYZ. Now what was the ITC of XYZ Limited? 4 crores in Madhya Pradesh. And now how that 4 crores will be distributed to ABC and XYZ. Now see the assets in Madhya Pradesh. What is the assets in Madhya Pradesh? 60 crores. How that 60 crores is given to ABC Limited and XYZ Limited? 30 crores to ABC, 30 crores to XYZ. So equal ratio. Then the ITC of 4 crores should be equally given to ABC and XYZ. Understood, pa? Then again, in Uttar Pradesh, they are having ITC of 6 crores and the assets 40 crores is divided between ABC and XYZ in 10:30 ratio, means 1:3 ratio. Then in that case, so 6 crores will be given to ABC and XYZ in what ratio? 1:3. So please calculate. 6 crores into 1 by 4. 6 crores into 1 by 4, 1.5 crores to ABC, 6 crores into 3 by 4, that is 4.5 crores to XYZ. Understood or not? So state wise, we need to take the assets ratio and we need to distribute the credit accordingly. Then one more illustration. Transferor and transferee should be in the same state. transferor and transferee should be in the same state. So these are some extra illustrations which I have added. In the previous edition book it was not there. So because these are the questions which could be tested. So maybe these are untapped area. So these could be tested in exam. That's why I coined these questions. Okay. Now, transferor XYZ Limited, transferee ABC Limited. So both transferor and transferee should be in the same state. Then only ITC can be transferred. Otherwise, ITC cannot be transferred. For example, transferor XYZ Limited is in Madhya Pradesh. So a transferee is also in Madhya Pradesh. So can ITC be transferred? Yes. But transferor is in Uttar Pradesh and transferee is in Karnataka. Can the ITC be transferred? No, ITC cannot be transferred. So what is the point that we are learning here? Transferor and transferee should be in the same state. Then transferor XYZ Limited is in Maharashtra. Transferee is also in Maharashtra, so that ITC can be transferred. So if transferor and transferee is in not same state, so then ITC cannot be transferred, that ITC will be lapsed, gone. Then another illustration. Now, in what ratio we need to distribute the credit in case of demerger? Assets ratio. But the total ITC we need to distribute in assets ratio. Individually, we don't have to follow the ratio. Individually means I have CGST credit, SGST credit, IGST credit. So total I need to transfer in assets ratio. Not necessary that individually I need to transfer in the assets ratio. Say this, a very important point. So XYZ Limited is in Maharashtra. Now it is demerged into ABC Limited and PQR Limited. So what is the ratio? 4:6, 4:6 or 2:3 ratio. Okay. Now, so we have CGST credit 6 crores, SGST credit 6 crores and IGST credit 4 crores. So we have to transfer this to XYZ, ABC and PQR. We have to transfer this to ABC and PQR. But CGST we don't have to transfer in that ratio. SGST we don't have to transfer in that ratio. IGST we don't have to transfer in that ratio. But overall we should transfer in that ratio. Now listen carefully. So what is the total ITC? 16 crores. 16 crores into 4 by 10, how much? 6.4 crores. 16 crores into 6 by 10 is how much? 9.6 crores. This much I need to transfer to ABC and PQR. But within that CGST, SGST, I can decide. Which means I am transferring 6 crores to PQR, 5.6 crores to PQR and 0.4 crores to ABC. Actually, I am not following the ratio here, correct? So I don't have to follow the ratio. Overall, I need to follow the ratio, but between this, I don't have to follow the ratio. Got it? Then, I am not giving any IGST to ABC, but sorry, alignment issue, this is 0 and this is 4 crores. And I am transferring 4 crores to PQR. Then SGST, I have not transferred anything to PQR and fully I have given to ABC. Now see the total for ABC. Total for ABC 6.4. So how much I should have given to ABC? 6.4. So within CGST, SGST, I did not follow the ratio, but overall I need to distribute that. Then what is the total for PQR? 5.6 plus 4, that is 9.6. I need to distribute 9.6. I distributed. So now, is this the only answer? No. I can distribute what? So any ratio I can distribute CGST, SGST, IGST. But the overall should be 4.6 and 9.6. Clear here? So in 4:6 ratio, I need to distribute. So overall, so which means I can give IGST 4 also, IGST 4, SGST 2, then also correct answer? Yes or no? So I can give IGST 4 to ABC, 2 crore to ABC, and 4 crores I will be giving it to PQR. I can internally, I can decide, I can transfer any manner, but the overall ITC, I need to follow the assets ratio. Then next one, section 18 subsection 4, read with section 29 subsection 5. So 18 subsection 4 is opposite of, so 18.1c and 18.1d. What is 18.1c? Composition scheme 2. Now what is opposite of that? Normal scheme to composition scheme. Then 18.1d, exempted supplies to taxable supply. Now what is the opposite of that? Taxable supply to exempted supply. Also cancellation of registration. In these three cases, I have to reverse the ITC on closing stock. In 18.1c, 1d, I avail the ITC on closing stock. But in this case, I will reverse the ITC on closing stock. Understood? Now, so I have inputs as such held in stock. Inputs in WIP held in stock. Inputs in FG held in stock. On these three inputs, whatever I have availed as ITC, now I will reverse. Even on capital goods also I will reverse ITC. But how much ITC I will reverse on capital goods? Total ITC divided by 60 months. Means the life of the capital goods is considered as 60 months, 5 years. And into balance life. For example, I purchased it 4 years before. Now, how much ITC I need to reverse? Total ITC divided by 60 months into 4 years I use. What is the balance life? 1 year. 1 year means 12 months. So into 12 I need to reverse. Is it clear? Means I am not using the capital goods for full 5 years now. What if the capital goods is used for full 5 years? Should we reverse anything? No. Inputs and capital goods can be purchased anytime. In case of 18.1c, 1d, in case of 18 subsection 1, we had the time limit. Now within 1 year prior it should be purchased. But here we don't have any time limit. Why? There we are availing ITC. So that's why time limit. Availing ITC means benefit to us. Loss to government. So time limit. Reversal of ITC. Loss to us. Benefit to government. So no time limit. Understood? So inputs and capital goods can be purchased anytime on which ITC is availed. If ITC is not at all availed on inputs, should we do the reversal? No, not required. If capital goods are purchased before 5 years on which ITC is availed, then also reversal shall not arise. Why? Because already we used for 5 years. There is no balance life. If invoice is pertaining to such inputs not available, in case of 18.1c, 1d there is matching. But in this case there is no matching. If no invoice, don't worry. Today whatever is the market value, take that market value and reverse the ITC. Okay. But there no invoice, sorry, you cannot take credit. But here reversal of ITC, reverse. You take the market value. How to determine the market value? Go to the CRCMA, they will tell. Okay. So if invoice value not available, then market value should be considered, and that market value will be fixed by CRCMA. And all these details should be reported in ITC 3. So ITC 3 is the form that is required for this. Still if you have balance in ITC, after reversal, that shall be lapsed. And if there is any shortfall for reversal, then such shortfall shall be payable using cash ledger. Then, for example, I need to reverse 1,50,000 per. I have a balance in ITC 2 lakhs and I need to reverse ITC 1,50,000. So therefore I will adjust from 2 lakhs. Still how much balance is there? 50,000. That shall be lapsed. Okay. Now I have balance 75,000. And what is the ITC that I need to reverse? 1,50,000. So therefore 75,000 I will adjust. So still what is the amount that I need to pay? 75,000. Understood or not? If we have any balance in ITC, that will be lapsed. If there is any shortfall, that I need to pay. And this computation should be done separately for CGST, SGST, UTGST. So ITC 1, whether CSMA certification is required for ITC 1? Yes, if ITC exceeds 2 lakhs. Then ITC 3, whether CSMA certification is required? Yes. When invoice value is substituted with market value. So now, what are the 4 forms that we have? Only 4 forms we have. ITC 1, purpose, availment of ITC on closing stock. ITC 2, transfer of ITC in case of transfer of business. ITC 2A, when single registration is getting separated into multiple registrations. ITC 3, reversal of ITC on closing stock. ITC 1, certified by CACMA? Yes, if ITC exceeds 2 lakhs. ITC 2, always yes. ITC 2A, no. ITC 3, yes, if invoice value is substituted with market value. Now, look into this illustration 11. S&P Private Limited, Coimbatore, exclusively manufactures and sells product Z, which is exempted from GST. So, they are making only exempted product and therefore they will not be registered. Okay. The company sells Z only within Tamil Nadu. The turnover of the company in the previous year was 55 lakhs. The company expects the sales to grow by 20% in the current year. Owing to the increasing demand for the product, the company decided to increase its production capacity and purchased a machinery on 1/7. The purchase price of the capital goods was 20 lakhs exclusive of GST at 18%. However, with effect from 1/11, exemption is withdrawn on product Z. So now, so far they were making exempted product. Now automatically that product became taxable. So therefore, they have made application for registration. Exemption available on the Z was withdrawn by government and GST at 12% was imposed. The turnover of the company for the half year ended 30/10 itself was 45 lakhs. Means as on 1/11, they crossed the threshold limit. Okay. Now, the board of directors of S&P Private Limited wants to know whether they have to register under GST. What is your answer? Whether they should register? Yes. When are they liable to get registered? When they commence business or whenever their outward supplies become taxable? Outward supply become taxable. So till the time their outward supply was exempted, they are not required to register. So only when their outward supply became taxable, so their aggregate turnover already exceeded threshold limit, so therefore they will be required to be taxable, registered and pay GST. So therefore, when should they make application for registration? Within 30 days. From which date? 1/11. Why 1/11? Because 1/11 they are liable to get registered. From that date, within 30 days, they need to make application for registration. Now, whether they can take ITC on machinery purchased, if yes, how much credit can be availed? So, machinery purchased on which date? 1/7. And when are they getting registered? 1/11. So, 1/7 to 1/11, how many quarters? July, August, September and October, November, December, 2 quarters. So, how much is the capital goods? 20 lakhs. 20 lakhs into 18%. 3,60,000. 3,60,000 minus 10%. Okay. 36,000 should be reduced. So, remaining they can take as ITC. So, can you tell me what is the mistake in this? First of all, which section is applicable? 18 1A or 1D? 1A. 1A. They are getting registered now only. When they are getting registered now only, from where they can take credit on capital goods? So they cannot take credit on capital goods. We are making a mistake by applying 18(1)(d). 18(1)(d) is applicable. Read. 18(1)(d) is applicable only when a registered person is having exempted supply and his exempted supply become taxable. Now only we are applying for registration pa. Where from they can take ITC on capital goods? So they cannot take ITC on capital goods because now only they are getting registered. What if they are already registered? Then they can take ITC on capital goods. So therefore we need to write the answer in 2 parts. If they are applying for registration only after 1/11, they cannot take ITC on capital goods because the applicable section is 18(1)(a). If they are already registered before 1/11, then they can take ITC on capital goods after reducing 5% for every quarter or part thereof. Then only we need to write the answer. 3,60,000 minus 10%, 3,24,000. Understood? Then last subsection, 18 subsection 6. GST payable on disposal of capital goods. First listen, I purchase some capital goods. What is the meaning of capital goods? Capitalized in my books is known as capital goods. So I purchase some capital goods. On that capital goods I paid GST and I have availed it as ITC. Now that capital goods is disposed of. When the capital goods is disposed of, I have to pay GST, whichever is higher, A or B, whichever is higher. A, like depreciation, ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on sale value, whichever is higher. Okay, so I have availed ITC on capital goods and the capital goods got sold. Now GST payable is highest of the following: ITC availed minus 5% for every quarter or part thereof. From which date to which date? From the date of invoice till the date of supply, or GST on sale value, whichever is higher. But in case of refractory bricks which are used for making clints, commercial clints to heat the raw material, that bricks, then molds and dies, jigs and fixtures, these three capital goods, if it is sold as scrap, then not A or B, whichever is higher, just B, that is GST on sale value. Understood? What are the three capital goods, pa? Refractory bricks, molds and dies, jigs and fixtures. How is it sold? Sold as scrap. Then we need to just take GST on sale value. No need to take ITC availed minus 5%, etc. Now have a look into this illustration 12. Capital goods purchased on 8/10/2019 for 10 lakhs, excluding GST at 12%. They were disposed of on 5/5/2021 for 6 lakhs, excluding GST at 12%. Compute the GST payable. First, what we need to do? ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale. What is the date of purchase? 8/10/2019. What is the date of sale? 5/5/2021. How many quarters? Take calendar quarters. Calendar quarter. Calendar quarter means October will come in which quarter? Third quarter. So take that October ending quarter. That is October, November, December. Then again 2020 full year na. 2020 full year. Check here. So therefore 4 quarters. Total 5. Then 2021 Jan, Feb, March, April, May. So 2 quarters. So total how many quarters? 7 quarters. 7 quarters. So 2019 1 quarter. 2020 full year 4 quarters. 2021 2 quarters, because we need to take quarter or part thereof. So 7 quarters into 5%. 7 5s are 35. So therefore we need to reduce 1,20,000. Why 1,20,000? Sir, 10 lakhs into 12% ITC availed is 1,20,000. 1,20,000 minus 35%, 78,000, or GST on sale value 6 lakhs into 12%, 72,000. Whichever is higher, 78,000 will be taken as the GST payable. Now, what will be your answer if such goods are not capital goods? Then, suppose if it is not capital goods, simple, sale value. What is the sale value? 6 lakhs on the 12%, 72,000 we will pay. What will be your answer if such capital goods are disposed without consideration and the value determined under Rule 31? Under Rule 31 is 4 lakhs. As per CGST rules, we determine 4 lakhs. Then that rule value will be taken. So therefore, A will be 78,000. B will be 4 lakhs into 12%. That is 48,000. Whichever is higher, 78,000. Then what will be your answer? Means suppose if it is without consideration, they need to give in the question some value. That value we will take. What will be your answer if such capital goods are disposed of without consideration and value cannot be determined? Means we don't have value in the question. Then what you will do? Only A, that is 78,000. What will be your answer if such capital goods are sold after 5 years? A will become 0. How A will become 0? ITC avail minus 5% for every quarter or part thereof. 5 years. 5 years means how many quarters? 20 quarters. 20 quarters into 5%. will be 100. So fully A will become 0. B will be GST on sale value, whichever is higher, 72,000. Understood, pa? So with this, we completed input tax credit fully in detail. Now, look into the practice manual portion. So actually, we completed the major area in GST, pa. We are left with only small topics. So invoice and time of supply, registration, composition scheme, returns and payment process. These are all actually, the weightage of these 5 chapters put together is hardly 10 marks, including MCQ. But 30 marks portion is from the remaining. Okay. So we have not discussed few questions. Take those questions. See question number 5 in page number 101. Question number 5 in page number 101. A registered person transfers its business to another person. Is such registered person allowed to transfer the unutilized ITC lying in its electronic credit ledger to such transferred business? Yes or no? A registered person is transferring the business to another person, pa. Is that registered person allowed to transfer the unutilized ITC lying in his electronic credit ledger to such transferred business? Yes. Section 18 subsection 3. But this transfer of business should be, with specific provision for transfer of liabilities. So this should be for specific provision for transfer of liabilities. And what is the form that is to be filed? ITC 2. And should it be certified by a CR CMA? Yes. So whenever that ITC form is filed, ITC 2 is filed, it will be reflected from the transferor. It will be transferred from the transferor electronic credit ledger to transferee electronic credit ledger. So like a theory question we need to write. Then next one, question number 10. Question number 10 in page number 103. AB, a registered person, was paying tax under composition scheme up to 30th July. However, with effect from 31st July, AB became liable to pay tax under regular scheme. Is AB eligible for any ITC? Composition scheme to normal scheme. 18(1)(c). They can take ITC on inputs as such held in stock, inputs in WIP held in stock, inputs in finished goods held in stock, and capital goods as reduced by 5% for every quarter or part thereof from the date of invoice till the date of conversion. Then question number 11. Babla Enterprise is exclusively engaged in making exempted supply of goods. Exclusively exempted supplies. And thus not registered under GST. Not registered. On 1st October, the exemption available on the goods gets withdrawn. On that day, the turnover of Babla Enterprises was 50 lakhs. Examine the eligibility of Babla Enterprise for availing ITC. 18(1)(a) why 18(1)(d)? 18(1)(a). Because they are liable to get registered and they make application within 30 days, then they can take ITC on inputs as such held in stock, inputs in WIP held in stock, inputs in FG. Because they are not registered. So 18(1)(d) is applicable only to a person who is registered. Next, question number 12. Mamta Trade Links trades in exempted goods and provides taxable service. So it is registered. Okay. On 1st October, exemption available on the goods gets withdrawn. Analyze the scenario and determine the eligibility of Mamata Trade Links. 18(1)(a) or 18(1)(d)? 18(1)(d). Because they are already registered and their outward supply, which was exempted, now became taxable. But these are the study material questions. I did not create this. These are study material questions. So therefore, ditto like this, it may come in exam. Okay. These are all not yet asked in exam so far. I have given the references. For every question I gave the reference. So if it is only I say study material, but not asked in any exam, means definitely the same question copy paste may come in exam. Okay. Be careful with respect to that. And this is the answer you need to write. What is the extra point that you need to write in 18(1)(d)? They can even take credit on capital goods after reducing 5% for every quarter or part thereof. Then 13th and 14th we completed. Look into 15th question. Dina Limited, a registered supplier from Maharashtra, is engaged in manufacture of passenger autos. The company provides the following details of purchases made or services available by it during the month of March. Purchase of iron, which is used as raw material. Goods were received in 2 installments, first in March and second in April. So now, right now we are determining ITC for which month? March month. So March month only they received first installment. Means can they take ITC in the month of March? Why? Only upon last installment or last lot they can take ITC. Purchase of accessories which were delivered directly to the dealers of the company on the direction of Dina Limited. Only invoice was received by Dina Limited. Can Dina Limited take ITC? Yes. We discussed one point. Bill to ship to transaction. The date on which the third person received the goods, it is deemed that the registered person has received the goods and they can take ITC. So bill to ship to transaction, ITC available in this case. Purchase of bus, seating capacity 15 for the transportation of employees from their residence to company and back. Where it will come? Motor vehicles for transportation of persons. Capacity exceeds 13. Therefore, it is not a block credit. ITC available. General insurance taken on a car used by executives of the company for official purpose. First, is car eligible for ITC? No. Car used by executives of the company is motor vehicle for transportation of persons. Capacity does not exceed 13 and not covered under exception. So ITC not available on car. As ITC not available on car, insurance service also on car, ITC not available. Blocked credit. So only on 90,000 and 1,97,000 ITC available. I have given detailed explanation what you need to write in exam. Okay. So these are the notes that you need to write in exam. So as I already told you, so please create an answer. You write the answer, then cross check that answer with the book. So you will know what are the mistakes that you are making in terms of presentation. So our objective is not to arrive at the correct answer. That already we crossed. Definitely you will arrive at correct answer. Mark my words. If definitely you will arrive at the correct answer. But the problem is about presentation. So answer 12,87,000 is correct. You will easily get. But 2,87,000. Yes, 2,87,000. Sorry. 2,87,000 that you will arrive. But this explanation is there now. In that explanation only you will make the mistake. Okay. Then question number 16. Comfortable Private Limited is registered under GST in the state of Odisha. It is engaged in business of manufacturing of iron and steel products. It has received IT engineering service from Hi-Fi Infotech Private Limited for 11 lakhs excluding GST at 18% on 28th October. Invoice for the service rendered was issued on 5th November. When they received services? October, but invoice is 5th November. Comfortable Private Limited has made part payment of 4,20,000 on 30th November. Being unhappy with the service provided by Hi-Fi Infotech, it did not make the balance payment. Deficiency in service rendered was made good by Hi-Fi Infotech Private Limited by 15th April of the next year. Comfortable Private Limited made the balance payment on 6th July of next year. Examine the availability of ITC with Comfortable Private Limited in respect of IT engineering service received by it from Hi-Fi Infotech Private Limited. First, when are they receiving the services? So it has received IT engineering services on 28th October. But the invoice is 5th November. So they can take ITC on November because invoice should be there. So when they have received the goods or services or the invoice, whichever is later. So they should have both. So invoice also should be there, should have received the goods or services. So 5th November they will take the ITC. Now they are making the payment within 180 days or not, we need to check. If the payment is not made within 180 days from the date of invoice, then with respect to the payment not made, they need to reverse the ITC. So count from 5th November 180 days. From 5th November you count 180 days. In November 25 days. In December 31 days. And January 31 days. February 28 days. March 31 days. So total 146. Up to March. Up to March 146. So now in the month of April, balance days. So April also will take 30. So 146 plus April 30, 176. So still what is the number of days? 4 days in May. So therefore, by 4th of May, whether the payment is made, check the question and tell me. On 30th November, part payment is made and balance payment is made on 6th July of the next year. So, part payment not made within 180 days. Now, from this question, tell me how much ITC to be reversed. Use your mind and tell me how much ITC to be reversed. 4,20,000 you paid, pa. Darling, you paid within 180 days 4,20,000. Whatever is not paid, for that only you need to reverse. I need, I need ITC to be reversed. Don't tell some numbers which you like. I need ITC to be reversed. ITC to be reversed. 1 lakh. How you got that number? Total 11 lakhs. Total 11 lakhs. But 11 lakhs is excluding GST. Up 4,20,000 what you paid is inclusive of GST. You understood? So, for 11 lakhs, you first add GST. For 11 lakhs, you first add GST, 18%. 11 lakh plus 18%. 1 lakh, 12,98,000. From 12,98,000, how much you already paid? 4,20,000. So minus 4,20,000. This is the amount you did not pay. Correct? In this amount, what is the GST component? Into 18 by 118. Because you took inclusive of GST. So you took inclusive of GST. So therefore the answer is 1,33,932. You understood how you got 1,33,932. Again I am repeating. See this. Total 11 lakhs. The mistake that we do generally is that 11 lakhs minus 4,20,000. Remaining amount into 18% we will take. But when we pay 4,20,000, that includes GST also na. So therefore, first you need to take, whenever you are taking 4,20,000 inclusive of GST, the total value also inclusive of GST. So 11 lakhs plus 18%. So total minus 4,20,000. So therefore the difference, that difference is the amount which we did not pay. In that amount, what is the tax component? Into 18 by 118, that is 1,33,932 we need to reverse. Understood, pa? So 12,98,000 minus 4,20,000 into 18 by 118, 1,32,932 we need to reverse ITC. Again, when we can take this ITC? When are they making payment? July. So as and when the payment is made in July, they can re-avail it as ITC. But interest computation we did not do in this. So because they did not ask, they asked only examine the availability of ITC. They did not give interest. Suppose if interest computation is given in the question, what we need to know? Date of utilization. We don't have that information in the question. That's why they did not ask interest computation. Suppose if they give date of utilization, then we need to do interest computation. Okay. So now either for the forthcoming exam, we may get a question like this. This is ditto. So this question may come because this is from ICA study material. And in our book, normal book, revised book, I gave one illustration with interest computation. Either that question or this type of question. Out of these two, one question is guaranteed for May 23. Then, look into the next one, question number 17. Messrs. Diwan and Sons of New Delhi has placed an order for 250 kgs of plastic granules at rupees 50 per kg exclusive of GST on Messrs. Karim and Bros of Noida, Uttar Pradesh. Karim and Brothers has agreed to deliver the goods at the warehouse of Diwan and Sons at New Delhi. While the order was getting packed at the factory of Karim and Brothers, Diwan and Sons got an order from Shubkamna Sales of Hapur, Uttar Pradesh. So it is like bill to ship to transaction. And for 250 kg of plastic granules at 60 rupees per kg, exclusive of GST. In order to save on transportation cost, Diwan and Sons asked Karim and Brothers to directly deliver the plastic granules to Shubkamna Sales at its godown located in Hapur. Accordingly, Messrs. Karim and Brothers have delivered the plastic granules at the godown of Shubkamna Sales at Hapur. Examine the availability of ITC with Diwan and Sons and Karim and Brothers. Now, first we have, so Diwan and Sons has placed an order with Karim and Brothers. So Messrs. Karim and Brothers, so where Karim and Brothers located? Which state? So Noida, Uttar Pradesh. Uttar Pradesh. Now, they are raising invoice to Messrs. Diwan and Sons. Diwan and Sons, Delhi, correct? And goods are delivered to, so goods are delivered to Shubkamna Sales. Shubkamna Sales, that is again Uttar Pradesh, correct? Now, in this case, so supply number 1 is between Karim Brothers and Diwan and Sons. That is supply number 1, correct? What is the value for which invoice is raised? This is invoice number 1. What is the value for which invoice is raised by Karim Brothers to Diwan and Sons? See there, 250 kgs at 50 rupees per kg, exclusive of GST 18%. So therefore, so 250 into 50 into 18%. How much? 14,000. So 14,750 availed as ITC by Diwan and Sons, correct? Now, Diwan and Sons will raise another invoice to Shubkamna Sales. This is invoice number 2. This is invoice number 2. Diwan and Sons will raise invoice to Shubkamna Sales, invoice number 2. For what value? Napa? GST is 2,250. You only told me, pa, I wrote 250 into 50 into 18%. How much? Okay. Fine, no issue. 2,250. In exam, ensure that you are not making this mistake because you only computed and told me. So 2,250 will be taken as ITC by Diwan and Sons. Now Diwan and Sons is raising invoice to Shubkamna Sales. For what value invoice is raised by Diwan and Sons? 250 kgs at 60 rupees per kg on 18%. So 250 kgs into 60 rupees per kg into 18%. 2000. So this 2,700 who will take as ITC? Shubkamna Sales will take as ITC. So this is the ITC with respect to Diwan and Sons, Karim and Brothers, etc. So first, so in the given case, goods are delivered by Karim and Brothers to Shubkamna on the direction of Diwan and Sons. Therefore, in the provisions of ITC, 2,250 will be available as ITC to Diwan and Sons. Further, it is another supply between Diwan and Sons and Shubkamna Sales. Therefore, Shubkamna Sales can avail ITC of 2,700. Understood, pa? Then next, question number 18. Fun Pharma Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information of GST paid on purchases made or input service availed by it during the month of September 2017. Purchase of cabs used for transportation of its employees. Cabs. So we don't have any capacity, which means we will take it as capacity does not exceed 13 and not covered under exceptions. Therefore, ITC not available. Inputs consisting of 3 lots, out of which first lot was received during the month. So only on last lot, so ITC not available. Capital goods, out of 3 items, invoice for 1 item was missing and GST paid on that item was 25,000. 2 lakh. So therefore 25,000 invoice is missing, means not in possession of tax paid document. So 2,25,000 can be availed as ITC. Outdoor catering service availed on Women's Day. Outdoor catering is a blocked credit, but we have 3 exceptions. Number 1, statutory obligation. Anywhere it is given as statutory obligation? No. Inward supply, outward supply in the same category. Are they into the business of outdoor catering? No. Inward supply part of outward supply? No. So therefore not covered under exceptions, which means ITC not available in this case. So only 2,25,000 they can take ITC. Then question number 19. Canwin Limited, a registered supplier, is engaged in manufacture of tanks. The company provides the following information pertaining to GST paid on purchases during the month of January 2018. Purchase of machinery where debit note is issued. Can we take ITC on the basis of debit note? Yes. So there are various tax paid documents, tax invoice, debit note, bill of entry, ISD invoice. So on the basis of debit note, ITC can be availed. And machinery is not in block credits and it is used in the course or furtherance of business, so ITC can be availed. Input purchased was directly delivered to Mr. Joe, a job worker and registered supplier. So can Canwin take ITC? Yes, because when goods are delivered to a third person on the direction of the registered person, the day on which the third person has received the goods, it is deemed that the registered person has received the goods and they can take ITC. So 80,000 they can take ITC. Computers purchased, depreciation was claimed on the said GST portion under Income Tax Act. ITC not available because of section 16 subsection 3, because depreciation is computed on tax component. Works contract service availed for construction of staff quarters within the company premises. Nowhere it is given that expenditure is charged to P&L, which means expenditure would have been capitalized. So ITC not available. So therefore 1,15,000 and 80,000, 1,95,000. Understood? Then next question number 20. Granites Textiles Limited purchased a needle detecting machine on 8 July 2017 from Makija Engineering Works Limited for 10 lakhs excluding GST, paying GST at 18% on the same. It availed the ITC of GST paid on the machine and started using it for manufacture of goods. The machine was sold on 22nd October for 7,50,000 as second-hand machine. So capital goods purchased and disposed of. So as per 18 subsection 6, we need to take A. ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale. What is the date of purchase? 8th July 2017. When is it sold? 22nd October 2018. How many quarters? So July 2017 means July, August, September, then October, November, December. So in 2017, 2 quarters. Again in 2018, Jan, Feb, March, April, May, June, July, August, September, October. So 6 quarters. So 6 quarters means 6 into 5, 30%. What is the ITC availed? 10 lakhs into 18%. 1,80,000 minus 30%. 6 quarters into 5%. How much? 1,26,000 or GST on sale value. What is the sale value? 7,50,000 into 18%. 1,35,000. Whichever is higher, 1,35,000. So that is the answer. We need to take 1,35,000 as the GST payable on capital goods. So this question actually given in RTP but did not come in exam. Okay. So therefore this question is also very, very important. Then next one, but this blocked credits repeatedly they asked. Blocked credits so far in at least 2 attempts once they have asked. Okay. So see this, how many questions are there on block credits? Cloud 7 Private Limited, a registered supplier, is engaged in manufacture of taxable goods. The company provides the following information pertaining to GST paid on purchases made or input service availed by it during the month of February. Trucks used for transportation of raw material. Can we take ITC on this? Why? Other motor vehicles. So therefore we can take ITC. Food and beverages for consumption of employees working in the factory. Is it mandatory as per statutory obligation? So therefore ITC not available because food and beverages is block credit. And whether inward supply, outward supply, same category, no. Inward supply part of outward supply, no. Inputs are to be received in 5 lots, out of which 3rd lot is received during the month. No, because only on receipt of last lot. Membership of club availed for employees working in the factory. Is it under statutory obligation? So ITC not available, blocked credit. Capital goods, out of 5 items, invoice for 1 item is missing. So we can take only 3,50,000. Raw material to be received in March. Right now we are computing for February. So to be received in March. So we cannot take ITC now. So 1,20,000 plus 3,50,000, 4,70,000. Okay. Then next one, Lee Mark Limited of Nasik, Maharashtra, a registered supplier, is engaged in manufacture of taxable goods. It provides the following details of items purchased and service availed by it from Gujarat for the month of March. So this detail is for March. Motor car purchase for employees to be used for personal as well as business purpose. First of all, motor car is a blocked credit. Capacity does not exceed 13 and it is not covered under exception. So ITC not available. Motor vehicle purchase for transportation of goods within the factory. Other motor vehicles. So ITC available. Within the factory means what? So means first of all it is not a motor vehicle. If it is not a motor vehicle also ITC available. You understood? Sir, first of all it is not a motor vehicle, sir. Under that reason also ITC available. Even if you treat it as other motor vehicles also ITC not available. Okay. So, ITC available. ITC available. Sorry. Then food items for consumption of employees. These items were supplied free of cost to the employees in lieu of service rendered by them to the manufacturer in the course of employment. So food items for consumption of employees, it is a blocked credit. These items were supplied free of cost, that is irrelevant for us. So it's a blocked credit. And so is it under a statutory obligation? No. So that's why ITC not available. Rent-a-car facility availed for employees to fulfill a statutory obligation in this regard. Generally, renting of car is blocked credit for employees. But as it is under a statutory obligation, ITC is available. So the answer is 2,36,000. Then question number 23. Advice regarding availability of input tax credit under CGST Act in the independent cases. Here we don't have to write any amount, but just we need to write the explanation as to whether ITC available or not available. AMT Company Limited purchased a minibus having a seating capacity of 16 persons for transporting of its employees. ITC available or not available? Reason: capacity exceeds 13 and it is a motor vehicle where it is used for transportation of persons and capacity exceeds 13 ITC available because it is not a blocked credit. Bangur Ceramics Limited, a manufacturing company, purchased 2 trucks for transportation of finished goods from the factory to dealers located in various locations within the country. Truck is other motor vehicles and not a block credit, ITC available. Hans Premium, dealing in luxury cars in Chanakpuri, Delhi, purchased 5 Skoda VRS cars for sale to customers. So motor vehicles capacity does not exceed 13 is a block credit. However, it is used for further supply. Therefore, ITC is available. Sun and Moon Packers Private Limited availed outdoor catering service to run a canteen in its factory. The Factories Act 1948 requires the company to set up a canteen in its factory. So why? So because it is under a statutory obligation. Generally outdoor catering is block credit, but as it is under a statutory obligation, so ITC available in this case. Then question number 24, ABC Limited, a registered supplier in Surat, Gujarat, has calculated output net liability after adjusting ITC in the books for the month of February 2021. So this is their liability, net GST liability after adjusting ITC for February 2021. During the above month, the following additional information is provided by ABC Limited. The company had given on hire 5 trucks to one of the transporters of Vadodara, a goods transport agency, for transporting goods for 10 days. The hiring charges for the trucks were 7,500 per truck per day. No. This is their outward supply. Wait. So don't just take everything as their inward supplies. The company has given on hire 5 trucks. They have given on hire 5 trucks. Means this is their outward supply. On outward supply, they need to pay GST. This is a question related to computation of GST. Okay. So therefore, they have given on hire 5 trucks to one of the transporters of Vadodara. Whether it will be taxable or exempted, 3,75,000. Exempted, exempted. Transportation of motor vehicles that can carry goods to a goods transport agency is exempted. Correct? Please check your book. So exemptions chapter, renting of motor vehicles, total 4 exemptions. This is not related to input tax credit. This is their outward supply. Okay. So outward supply data, they are asking us to compute the net liability of GST to be paid in cash along with working notes. Means we have both inward supplies and outward supplies in this question. So we need to find what is outward supply, because not every question will be only on input tax credit. They will give mix of both inward and outward supplies. First you need to identify which one is outward supply, which one is inward supply. On outward supply we need to compute the tax. On inward supply we will take ITC. Okay. So is this outward supply or inward supply? Outward supply, because they have given on hire 5 trucks. Okay. So but it is exempted. They don't have to pay GST with respect to this. Why it is exempted? So hiring of motor vehicle that can carry goods to a goods transport agency is exempted. Have you checked? So renting of motor vehicles, it is there. Then next, the company sold goods to Exxon Company of Delhi on 6th January with a condition that interest at 2% per month will be charged on the invoice value if Exxon Co failed to make payment within 30 days of the delivery of goods. Goods were delivered and also invoice was issued on 6th January. Exxon Co paid the consideration for the goods on 20th February along with applicable interest. Right now we are determining for which month? February 2021. February 2021. So company sold goods on 6th January. 6th January means previous month, with the condition that interest at 2% per month will be charged on the invoice if Exxon Co failed to make payment within 30 days of delivery. So what is 30 days of delivery? 6th January means 5th February. Correct? 5th February they should make the payment. Goods were delivered and also invoice was issued on 6th January. X and Co paid the consideration for the goods on 20th February along with applicable interest, which means 5 lakhs will not be taxable in February month. 5 lakhs already taxed in January month. Then what will be taxable in February month? Interest. Interest will be taxable on receipt basis. When the interest is received, 20th February, how much is the interest? 5 lakhs into 2% for how many months? Will be charged if X and Co fail to pay within 30 days. So, how many months here? Payment is made on 20th February. So, 2% per month. Okay. How many days delay beyond 30 days? 15 days, because 6th January. 6th January, 30 days is 5th of February, because in January 31 days. 5th of February. So 20th February means, so 15 days. 15 divided by 30. Why 15 divided by 30? Because 1 month it is 2%. For half a month we need to calculate. So 5 lakhs into 2% into 15 by 30. 5,000. 5,000 will be taken as the interest. Okay. So this 5,000, 1 second. 5 lakhs is inclusive of GST or exclusive of GST? The rate of GST is 9%, CGST 9%, SGST 9%, 18% IGST. 1 second. Above amounts are excluding GST, sorry. Then interest will be payable on the entire amount due, because whenever supplier is not collecting the money on time, so they will be collecting interest on the total amount due from the customer. Already I told you. What is the total amount due from the customer? Not 5 lakhs. So because 5 lakhs is excluding GST, then what is it including GST? 5 lakh? 5 lakh 90,000. So 5 lakhs plus 18%. 5 lakh 90,000. On that 5 lakh 90,000, multiply 2% interest for half month. So 5,900. So this 5,900 will be the interest. That will only be taxable in February month. But this 5,900 will be inclusive of GST. So therefore, what will be the GST component in this? 18 by 118. What is 18 by 118? 5,900 into 18 by 118 will be 900. You understood, pa? So first we are taking whatever is the liability that is given in the question before making these adjustments. That is 3 lakhs, 2 lakh 50 and 3 lakhs. That is this CGST, SGST, IGST. Trucks, no GST on trucks because it is exempted. Then on that interest. So interest will be chargeable to GST. How to compute interest? Already I did this. On that GST will be 900. Why? Because the company sold goods to XN company of Delhi. So where is this company located? Surat, Gujarat. I told you. In case of interstate supply, in case of goods, we need to take ending point of the goods as the place of supply. What is the ending point of the goods? Delhi. So therefore, location of supplier, Gujarat, and place of supply, Delhi. Therefore, it will be interstate supply. That's why that 900 is kept under IGST column. Understood? Then, next transaction. The company sought legal consultancy service for its business from A and Advocates, a partnership firm of advocates situated at Gujarat. Legal services by individual advocate or firm of advocate to a business entity, RCM. But before that, check whether there is any exemption. Whether this business entity turnover during the previous year does not exceed threshold limit. No, we don't have any such information. So which means it will be covered under RCM. Now concentrate. So it has two adjustments. First, we need to add it to the RCM liability. Second, we can take ITC with respect to this. Is it clear? So this has two adjustments. First, it should be added to our RCM liability. Second, we can take it as ITC. And where is it received? Gujarat. and where the person supplier is located, Gujarat. Is it inward supply or outward supply? Inward supply. On inward supply, they need to pay GST under RCM and they can take it as ITC. So 1,50,000 into 9%, 9%. So 13,500 is first of all their RCM liability. Even this can be taken as ITC and adjusted against FCM liability. Understood? Two adjustments. First, we need to add it to RCM liability. But add it to RCM liability after adjusting input tax credit, because for payment of GST under RCM, we cannot use the input tax credit. So that's why we need to keep it separately in another statement. So whatever GST we paid under RCM, we can take as ITC, and that ITC will be adjusted against which liability? FCM liability. Okay? Understood? So therefore, this 13,500 we are now taking as ITC and adjusting against the liability. Then the company ordered 3,000 packets of tools which are to be delivered by the supplier of Delhi. Company ordered 3,000 packets of tools. Means inward supplier, outward supplier, inward supplier, which are to be delivered by the supplier of Delhi via 3 lots of 1,000 packets monthly. The supplier raised invoice for full quantity in February and last lot is delivered in April. Means can we take ITC in this month? No. Right now we are computing for February. So February we cannot take ITC with respect to that. Then the company supplied 10,000 packets of tools to one of its customer. Inward supplier, outward supplier, outward supply. The company supplied 10,000 packets of tools to one of its customers at 10 rupees per packet in Gujarat in January 2021. Afterwards, the company revalues it at 9 rupees per packet in February 2021 and the company issued a credit note to the customer for 1 rupee per packet. Now, is it allowed as deduction? January already they raised invoice pa. We are not bothered about this 10 rupees per packet pa. But they gave a credit note. Is this credit note allowed as a deduction? Is it credit note under section 34? Check when the discount is given. Before supplier, after supplier. After supply. Whether the terms and conditions are agreed before or at the time of supply. No. Then how it will be allowed as deduction here? So, therefore this credit note is not under section 34. Which means because of that, will there be any reduction in liability? No. So therefore, this is a post-supply discount. And post-supply discount is not allowed as deduction if the terms are not agreed before or at the time of supply. Then, what will be taken as the liability? Only this. So 3 lakhs, 2 lakh 50 and 3 lakh 900. And from this we need to reduce ITC. That is legal services. Now you got this as FCM liability. To this FCM liability, we need to add RCM liability. That is 13,500, 13,500. Now we get the total liability 3 lakhs, 2 lakh 50 and 3 lakh 900. Understood or not? So, in this, the crucial points are, this is a very good question and given in December 21, already 8 marks they have given this question. But these are the type of questions when you get in first question, you will find it difficult. But in this, not all points are difficult. So, first thing, whenever you see a consolidated question like this, actually in this question, they have connected 3 chapters. Value of supply they connected, exemptions they connected, and input tax credit also they have connected. So, therefore, first you need to segregate it into inward supplies and outward supplies. Okay, and you need to prepare totally 4 statements. You need to make the answer in 4 statements. Statement number 1. So GST under FCM. So statement showing computation of GST under FCM with respect to outward supplies. With respect to outward supplies. This is statement number 1 pa. Then statement number 2. So the statement number 2 will be GST under RCM. GST under RCM on inward supplies. GST under RCM on inward supplies. you prepare the answer in like, so you start the answer in a paper page. So in that first page, fully it should be statement 1. GST under RCM with respect to outward supplies. Second page is GST under RCM on inward supplies. And thereafter, we have third statement, that is input tax credit. Input tax credit. ITC availed and utilized. Okay, input tax credit. So statement showing input tax credit. Now 3 statements we will parallelly open. Okay, and last statement is computation of net GST payable. That is based on these 3 statements we will arrive at the computation of net GST payable. Now, so in this again particulars, CGST, SGST, IGST. So we should be careful. This I told you already. That is, whenever the question they are talking about CGST 9%, SGST 9%, IGST 18%, we need to prepare separately. And first you will read the transaction. So ABC Limited, a registered supplier in Surat, Gujarat, has calculated output tax liability after adjusting ITC this much for February 2021. So therefore this will come in which statement? 1 or 2 or 3? 1. This is GST payable under FCM with respect to outward supplies, na? So therefore GST liability given. GST liability given is, so 3 lakhs, 2 lakh 50 and 3 lakhs. 3 lakhs, 2 lakh 50 and 3 lakhs. Like that you have taken. Then next one. Next one is the company had given on hire. So it's outward supply. So it should come in which statement? First statement. But it is exempted. So therefore we will write that, so company hiring of trucks to GTA, and there itself we can give the explanation. What is the explanation? The said activity is exempted. Wide notification 12/2017, because hiring of means of transport to a GTA is exempted, like that. And amount column will be nil, nothing. Then next, again, second. So this is also outward supply. So company sold goods to XN company Delhi. So here, in this case, invoice is already raised in January. So therefore, as per section 15, subsection 2, clause D, interest, late fee or penalty for delay in receipt of consideration will be included in the value and chargeable to GST on receipt basis. So they have received that interest in the month of February. So therefore, interest will be so on so amount on that GST. And as location of supplier is in Gujarat and place of supply is Delhi, therefore we will take it as interstate supply, and therefore 900 rupees we are adding in IGST interest. Statement 1. Then the company sought legal advice. So legal services under RCM. So it should come in 2 statements. What are the 2 statements? Statement 2 and statement 3. Correct? So statement 2, GST under RCM, IGST. So what is the legal services? Legal services. So legal services will be 1 lakh 50. 1 lakh 50 into 9%. So 13,500 and 13,500 CGST, SGST because Delhi. Same thing we need to again repeat in input tax credit also, because we can take ITC with respect to this now. So same thing you need to enter in 2 places. So legal services. So 13,500, 13,500. So now the next transaction. So we have to write that. So ITC is available only on receipt of last lots. So therefore it should come in which statement? Inward supply, outward supply, inward supply. So it should come in statement number 3. In that statement number 3, statement number 1 is outward supply pa. Statement number 2 also inward supply under RCM pa. Statement number 3 is input tax credit. So this is your inward supply. On this inward supply you cannot take ITC. But in statement 3 we need to write that. So we will not take ITC means we cannot ignore it. We have to write in answer. So what we will write? ITC can be availed only on receipt of last lot. So in the present case we are receiving only few lots in the month of February. So full lot is received in April. So ITC can be availed in April but not in February. So amount column will be 0. Then again, fifth point. So this will be outward supply. So it should come in which statement? Statement 1. Statement 1. In that statement 1, you will write, as per section 15 subsection 3, post supply discount is allowed as deduction only if the terms and conditions are agreed before at the time of supply. In the present case, the terms are not agreed before at the time of supply. Therefore, it is not allowed as a deduction. Amount column will be 0. So now, so you have to total all this. Everything is completed in the question. So now you need to total these statements. So that is 3 lakhs, 2 lakh 50 and 3 lakh 900. Then this will be same, only one, 13,500. In this question only one, but there may be other questions in which more details could be there. So 13,500, 13,500. Now 3 statements we have completed. Along with the notes also we completed. Now fourth statement we need to take, that is computation of net GST payable. In computation of net GST payable, please remember the template. We need to take statement number 1 minus statement number 3 plus statement number 2. Okay. First will be statement number 1, FCM liability, minus statement number 3, that is ITC. Add RCM. So CGST, SGST, IGST. So first we need to take statement 1, that is FCM liability. FCM liability statement 1. So what is that? Already we did the total. 3 lakhs, 2 lakh 50,000 and 3 lakh 900. 3 lakhs, 2 lakh 50,000 and 3 lakh 900. Then minus statement 2. Statement 2 or statement 3? Statement 3, ITC. So what is the ITC? 13,500, 13,500. So then we need to add RCM liability, that is statement number 2, 13,500, 13,500. So then, sir, anyhow we will add and deduct same number na sir. Then why we need to do that? Pa, follow this template pa, because sometimes what will happen, we will have so less of FCM liability and more of ITC. So not only this, here it is a coincidence. Only one transaction we have inward supply, but we will have more than one inward supply also na. That's why. So you need to stick on to this format. So therefore 3 lakhs net liability will be 3 lakhs, 2 lakh 50,000 and 3 lakh 900. Clear pa? So this way you present the answer and you will get 8 out of 8 marks. You will not make any mistake. You will not get confused. All notes and also you have given in the question answer itself. Got it? Then next one, question number 25. What is the ITC entitlement of a newly registered person? What is it you need to write? ITC entitlement of a newly registered person. Section 18(1)(a) and 18(1)(b). If they are making application for registration within 30 days, they can take ITC on inputs as such held in stock, inputs in WIP, inputs in FG. That details we need to write. Then, what is the tax implication of supply of capital goods by a registered person has taken ITC on such capital goods? Which one we need to write? Section 18 subsection 6. So much of the ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on sale value whichever is higher. However, in case of molds and dies, jigs and fixtures, refractory materials, bricks which are sold as scrap, we will pay GST only on the sale value. That provision we need to write. So this is asked in MTP, May 22 MTP, but it is given in study material also. Look into question number 27. Mr. B, a registered supplier of Uttar Pradesh, is doing the trading of taxable goods. He approaches you to understand the manner of utilization of available ITC with reference to provisions of payment of tax. So which one you need to write? Those 4 rules. Manner of utilization of ITC. So those 4 rules we need to write. Rule 1, there is no restriction with respect to IGST, with respect to others, respective credit should be used for payment of respective. Those 4 rules we discussed now, that we need to write. So I have given this question just to convey as to for what question we need to write what answer. So when you see the wording, so utilization, manner of utilization of ITC, That section 49 subsection 5 we need to write. Then see this, RTP November 22, Rimjim sales, a registered supplier receives 100 invoices for inward supply of goods or services involving GST of 10 lakhs from various suppliers during the month of January 2022. Out of 100 invoices, details of 80 invoices involving GST of 6 lakhs have been furnished by the supplier in their respective GSTR1. So what is the matched ITC? 6 lakhs, and filed by respective suppliers in GSTR1 on the prescribed due date therefore, and such details has also been communicated to the recipients in GSTR2B. Compute ITC that can be claimed by Rimjim sales in GSTR3B of the month of January to be filed by 20th February, assuming that GST of 10 lakhs is otherwise eligible for ITC. So, how much can be taken as ITC per? Only 6 lakhs. Why? So, as per section 41, only those ITCs which are reflected in GSTR 2B of the recipient generated based on GSTR 1 of the supplier can be taken. So, in this case, so only 6 lakhs is reported, so that much only can be taken. What about the ITC with respect to 4 lakhs? That can be taken as ITC as and when supplier declares the details in GSTR 1. Okay. So, these are the questions that we have on input tax credit. We completed fully. Okay. So, we will have another chapter, that is registration, after a break. Take a break and thereafter we will start with registration under GST. Okay. See this part. Segment 9, registration under GST, page number 143. Registration, we have total 9 sections in registration, that is section 22 to section 30. So, up to section 21 is related to input tax credit, and section 22 to section 30 we have registration. Section 22, section 23 and section 24 are 3 important sections in registration which talks about the legality. Section 22 is when a person is required to get registered. Section 23, exemption from registration. Section 24, compulsory registration. So these are the 3 sections first we need to complete. Section 22 talks about when a person is required to get registered. Section 23, when a person is exempted from registration. Section 24, when a person is compulsorily required to get registered irrespective of threshold limit. Now, as per section 22, a person is required to get registered whenever their aggregate turnover in a financial year exceeds threshold limit for registration. So, aggregate turnover exceeds threshold limit for registration, they are required to get registered. What is the meaning of aggregate turnover? Aggregate turnover means it includes all 4 supplies, that is taxable supplies, exempted supplies. Exempted supply includes non-taxable supplies, then exports and interstate supplies, and this should be computed on a all India basis or state wise? On a all India basis. But aggregate turnover does not include inward supply on which GST payable under RCM, because turnover means mostly outward supplies, mainly outward supplies. So that's why inward supply should not come. Also taxes, CGST, SGST, UTGST, IGST should be excluded. Now, first we need to compute the aggregate turnover, and then we need to see that aggregate turnover exceeds threshold limit, then a person is required to get registered. So what is the threshold limit for registration? That threshold limit for registration depends upon whether you are doing business in a single state or you are doing business in multiple states. If you are doing business in single state, and if that single state is in MMTN, Manipur, Mizoram, Tripura, Nagaland. Then the limit will be 10 lakhs. Okay, let it be goods or services, the limit will be 10 lakhs. If you are doing business in multiple states, single state, and that single state is in use stamp, you are doing business in single state, and if that single state is in MMTN, Manipur, Mizoram, Tripura, Nagaland, then the limit will be 10 lakhs. You are doing business in a single state, and that single state is in use stamp. Use stamp is Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Puducherry, Pondicherry, these 6 states. U stamp, U for Uttarakhand, then Sikkim, yes, T, Telangana, A, Arunachal Pradesh, M, Meghalaya and P, Pondicherry or Puducherry. Then the limit will be 20 lakhs. Let it be goods or services. If you are doing business in other states other than MMT and use stamp, then if you are exclusively engaged in supply of goods, the limit will be 40 lakhs. If you are supplying both goods and services or only services, then the limit will be 20 lakhs. Now concentrate. You are doing business in Telangana, engaged exclusively in supply of goods. What is the limit? 20 lakhs. You are doing business in Nagaland, exclusively engaged in supply of goods. 10 lakhs. You are doing business in Tamil Nadu, exclusively engaged in supply of goods. 40 lakhs. You are doing business in Karnataka, engaged in both supply of goods and services. 20 lakhs. You are doing business in Andhra Pradesh, exclusively engaged in supply of goods. 40 lakhs. Andhra Pradesh is not in the list. So therefore the limit will be 40 lakhs. You are doing business in Meghalaya and exclusively engaged in supply of goods. 20 lakhs. There it is MM, Manipur, Mizoram, not Meghalaya. So first MMTN, MM is Manipur, Mizoram, not Meghalaya, okay. So Meghalaya will be 20 lakhs limit. And then if you are doing business in multiple states, this you understood now? What is that, tell me? You are doing business in single state, and if that state is in MMTN, limit is? And use stamp, other states, exclusively goods, 40 lakhs. Both goods and service or only services, 20 lakhs. Now, what is MMTN full form? Manipur, Mizoram, Tripura, Nagaland. Use stamp, Uttarakhand, Sikkim, Telangana, okay, Arunachal Pradesh, Meghalaya, Pondicherry. Then, if you are doing business in multiple states, this is only little difficult, okay, concentrate. If you are doing business in multiple states, one of the state, in that multiple states, one of the state is in special category state, that is MMTN, and taxable supplies are made from that state. One of the state is a special category state and taxable supplies are made from that state. Both the conditions should be satisfied. Out of the given states, one state should be a special category state, that is MMTN, and taxable supplies are made from that state. If these two conditions are satisfied, the limit will be 10 lakhs. Let it be goods or services. That's the first point. You are doing business in multiple states and any one state is special category state, that is MMTN, and taxable supplies are made from that state, the limit will be 10 lakhs. You are doing business in multiple states, none of the states is in MMTN use stamp. Out of the given states where you are doing business, none of the states is in MMTN use stamp, and you are exclusively engaged in supply of goods, then the limit will be 40 lakhs. So out of the given states, none of the state is in MMTN use stamp. One state also should not be in MMTN use stamp, and you are exclusively engaged in supply of goods, then the limit will be 40 lakhs. In all other cases, the limit will be 20 lakhs. Now concentrate. You are doing business in multiple states. One state is Sikkim. One state is Sikkim. Okay. Now you are exclusively engaged in supply of goods. What will be the limit? 20 lakhs. First point, 10 lakhs will not come because it is not MMTN. And last point will not come because it is One state also should not be in MMT and use stamp, but Sikkim is in use stamp. Therefore, 40 lakhs limit will not come, only balancing figure, that is 20 lakhs. Understood, pa? So can you tell me this alone once again? Multiple states, you are doing business in multiple states, and one of the state is MMTN, and taxable supplies are made from that state. Limit is 10 lakhs. Then second point you need to remember, none of the states is in MMTN use stamp and exclusively engaged in supply of goods. Then the limit will be all other cases. Now, say this, you should not be engaged in supply of pan masala, tobacco and tobacco products, ice cream and edible ice, bricks and roofing tiles. If you are exclusively engaged in supply of these goods, 40 lakhs limit you will not get. Then again it will be 20 lakhs limit. So wherever 40 lakhs limit comes, there we need to remember that you are not engaged in supply of ice cream, edible ice, pan masala, tobacco products, bricks and roofing tiles. You should not be engaged in supply of these goods. If you are engaged in supply of these goods, then the limit will be 20 lakhs. Now concentrate, please listen. You have a shop in Tamil Nadu. You have a shop in Tamil Nadu. You are exclusively engaged in supply of goods. In that shop, there is one fridge. In that fridge, you are selling ice cream. Okay. So you are keeping ice cream and you are selling ice cream also in your shop. So now, in this case, whether 40 lakhs limit is applicable or not applicable? Applicable. Applicable. If you are exclusively engaged in supply of ice cream shops will be there, na, Ibaco or BR, etc. So these ice cream shops will not get 40 lakhs. Exclusively engaged in supply of ice cream, edible ice, pan masala, tobacco products, bricks and roofing tiles, then only 40 lakhs limit not applicable. There is a small shop. They will sell chocolates, biscuits, small items, and they also sell cigarettes. Okay. Now, will they get 40 lakhs limit? Yes. Because they are not exclusively engaged in supply of tobacco products. Suppose if there is a pan shop which is engaged in sale of pan masala and tobacco products, then 20 lakhs only, 40 lakhs limit is not applicable. You understood or not? Then the limit of 40 lakhs is applicable only in case of exclusive supply of goods. However, interest on loans, advances, deposits, income is allowed. Actually, interest on loans, advances, deposits is service. Correct? See this, concentrate. You are doing business in Tamil Nadu. You are doing business in Tamil Nadu. Supply of goods is 38 lakhs. Supply of goods is 38 lakhs. And delivery services is 1 lakh. Okay, delivery service is 1 lakh. Now, what is the applicable threshold limit? What is the applicable threshold limit? 40 lakhs, no, 20 lakhs. Why 20 lakhs? You are not engaged exclusively in supply of goods. You are supplying both goods and services. But small element only na sir, service, let it be. But you are engaged in supply of service na. So therefore both goods and services. So therefore what will be the applicable limit? 20 lakhs. Whether this person is required to get registered? Yes. However, we have an exception to this. That is interest. You are doing business in Tamil Nadu. You are exclusively engaged in supply of goods, 38 lakhs, and you got a interest income. So that interest income is 1 lakh. So total 39 lakhs. Now what is the applicable limit? 40 lakhs. So if you are engaged in supply of goods and if you have only one service, that is interest, still you will be treated as engaged in supply of goods. So therefore the limit will be 40 lakhs. So whether this person is required to get registered or not? No. So that is this exception. However, interest on loans, advances, deposits, income is allowed. So means the limit will be taken as 40 lakhs only. Clear here? Then suppose if a person is engaged in exclusive supply of services, or supply of both goods and services, what is the limit? 20 lakhs or 10 lakhs as the case may be. Why for Manipur, Mizoram, Tripura, Nagaland they are keeping 10 lakhs as the limit? Because the effort that it requires to earn 20 lakhs here requires the same effort to earn 10 lakhs there. Reason, it is not that easy to earn money there because that's a backward region and their economic activity is not there. Money is not there with the people. So they will not be able to spend money that much. They depend mostly on the natural resources. So therefore, earning 10 lakhs itself is very difficult there. That's why the limit has been reduced to 10 lakhs. Got it? That is the reason behind it. Then, the limit of 40 lakhs is not applicable in the following cases. When, if a person is voluntarily registered, see, once you are registered, this 20 lakhs, 10 lakhs, 40 lakhs limit is not applicable. Means you have to pay GST. You got it? Sir, the applicable limit to me is 20 lakhs. Now, my turnover is only 5 lakhs, but I registered. Then, next to 15 lakhs, no need to pay GST, I have to pay GST. I have to pay GST the moment I am registered. No need to see the 20 lakhs limit. Okay. So then wait and register only after crossing 20 lakhs. Why are you getting registered now? You have to wait till 20 lakhs. Thereafter you register, then you are enjoying the benefit. Are you understanding? So if a person is voluntarily registered, they will not get the threshold limit. Also, if a person is compulsorily required to get registered, then also this limit of 40 lakhs is not applicable. Compulsory registration means what? Irrespective of threshold limit, they are required to get registered. Then, person making supply of ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles also will not get 40 lakhs limit. Understood? Then, now look into the overview of these provisions in this. So, below this, that is page number 146. There are some illustrations. Have a look into that illustration. Illustration 1. Mr. X is exclusively engaged in supply of goods in Sikkim. Sikkim, what is the limit? Sikkim, what is the limit? 20 lakhs. Why 20 lakhs limit in Sikkim? Because you are doing business in single state. And that single state is in U stamp. Therefore, the limit will be 20 lakhs. But this person is not at all required to get registered. Why? Because whenever you are making only exempted supplies, whatever may be the turnover, they are not required to get registered. For example, Tasmak, a liquor shop, and their turnover, each and every shop on an average, if you see, the turnover will be 80 lakhs to 1 crore easily. So now, whether they are required to get registered? No. Why? Because all are non-taxable supplies. So non-taxable supplies means exclusively exempted supplies. So they are not required to register. Suppose in the Tasmak liquor shop, they sell liquor plus plastic cup, water bottle, pickle, chips, etc. Now in that case, whether they need to register? Yes. Why? They are making partly taxable and partly exempted. So this main dish is exempted, but side dish is there, na? That will be taxable. So circle plus side dish, total will exceed the aggregate turnover threshold limit. So they need to register. But once they register, they need to pay GST only on side dish, not on the main dish. You understood or not? So while computing the threshold limit, we take exempted supplies also, taxable supplies also. But once they are liable to get registered, they need to pay GST only on taxable supplies. But if you are making exclusively exempted supplies, you are exempted from registration. Then illustration 2. Mr. X is engaged in making supply of goods in Tamil Nadu, Andhra Pradesh, Meghalaya. Whether one of these states is special category state? Yes, sir. MMTN. Manipur, Mizoram, Tripura, Nagaland. I know you will definitely get confused in Meghalaya. You will think in MMTN. No. MMTN is Manipur, Mizoram, Tripura, Nagaland. Whether one of the state is in special category state? No. So therefore 10 lakhs limit is not applicable. and none of the states is in MMT and use stamp? No, because one state is in MMT and use stamp. Which one? Meghalaya is in MMT and use stamp. Therefore, limit of 40 lakhs not applicable. Why 40 lakhs not applicable even though they are engaged in exclusive supply of goods? Because one of the state is in MMT and use stamp. Therefore, 40 lakhs limit not applicable. So, balancing figure. What is the balancing figure? 20 lakhs. So, the applicable threshold limit will be 20 lakhs. Now, what is the aggregate turnover? While counting aggregate turnover, we need to take taxable, exempted, everything. So, 5 plus 3 plus 8 plus 2 plus 4. What is the aggregate turnover? 22 lakhs. Whether aggregate turnover exceed threshold limit? Yes. So whether Mr. X is liable to get registered? Yes. And where it should get registered? Tamil Nadu and Andhra Pradesh, but not in, why not in Meghalaya? Because they are making exempted supplies. Actually, Meghalaya influences the threshold limit, but they are not required to get registered in Meghalaya because they are making only exempted supplies in Meghalaya. When they will register in Meghalaya? As and when they start making taxable supplies in Meghalaya, they are required to get registered. Understood? Next, illustration 3. Mahadev Enterprises, a sole proprietorship firm, opened a shopping complex dealing in supply of goods at multiple locations, that is in Himachal Pradesh, Uttarakhand and Tripura in the month of June. It has furnished the following details relating to supply made at multiple locations for the month of June. So they are doing business in 3 states, Himachal Pradesh, Uttarakhand and Tripura, and they are making taxable supplies, exempted supplies, everything they are making. Now, what is the applicable threshold limit? Whether one of the state is in MMTN? Yes. And the taxable supplies are made from that state? Check. See, just because one of the state is in Manipur, Mizoram, Tripura, Nagaland, you cannot take 10 lakhs. One of the state should be in MMTN and taxable supplies are made from that state. Yes. So we are making taxable supplies in Tripura. Therefore, the limit will be 10 lakhs. And what is their aggregate turnover? Whether it crossed 10 lakhs? Yes, because in Himachal Pradesh itself is 22 lakh 50,000. So therefore, their aggregate turnover exceeds 10 lakhs. Are they required to get registered? Yes. But where? In Himachal Pradesh and Tripura, but not in, why not in Uttarakhand? Because they are making non-taxable supplies. So they are not required to get registered in Uttarakhand. Understood? Now, determine whether Mahadev Enterprise is liable to be registered. Yes, because the applicable threshold limit is 10 lakhs and their aggregate turnover exceeds 10 lakhs. And what is the threshold limit? 10 lakhs, and they need to register in Himachal Pradesh and Tripura. Now, explain with reasons whether your answer in 1 will change in the following independent cases. A. If Mahadev Enterprises is dealing in taxable supply of goods only from Himachal Pradesh. So Himachal Pradesh, they don't have data of Uttarakhand and Tripura. They are doing business only in Himachal Pradesh. Then we need to refer to the first branch. They are doing business only in single state. And is that single state in MMTN? Is that single state in U-stamp? So other states. So other states, are they engaged only in supply of goods? Yes. So the limit will be, and their aggregate turnover does not exceed 40 lakhs. Therefore, not required to get registered. Understood? Now, next part. If Mahadev Enterprises is dealing in taxable supply of goods and services only from Himachal Pradesh, they are dealing in both goods and services, then the limit will be 20 lakhs. So even though they are doing business only in Himachal Pradesh, but both goods and service, so 20 lakhs, but their turnover is 22 lakh 50, therefore they need to register in Himachal Pradesh. Then, if Mahadev Enterprises is dealing in taxable supply of goods only in Himachal Pradesh and also has affected interstate supply of taxable goods, even though their limit is 40 lakhs, only one state and only engaged in supply of goods, so 40 lakhs, but they are making interstate supplies. Interstate supplies of goods is reason for compulsory registration. So there are some cases where a person is compulsorily required to get registered. In that one point is a person who is making interstate supply of goods, taxable interstate supply of goods. So due to that reason, so under section 24, that person is compulsorily required to get registered. Then illustration 4. A Limited is doing business in 3 states, Tamil Nadu, Kerala and Nagaland. And what is the applicable threshold limit? They are doing business in multiple states. Whether one of the state is a special category state? Yes. And taxable supplies are made from that state? No. So 10 lakhs limit not applicable. Okay. 40 lakhs limit also not applicable because one of the state is in MMTN use stamp. So 40 lakhs limit also not applicable. Then what is the limit applicable in this case? Balancing figure, that is 20 lakhs. So what is their applicable threshold limit? 20 lakhs. What is their aggregate turnover? 4 plus 2 plus 3 plus 1 plus 2, that is 12 lakhs, and it does not exceed 20 lakhs. Therefore, they are not required to get registered. Understood? Why are we not taking 10 lakhs limit? So even though they are located in Nagaland, but they are not making taxable supplies in Nagaland, that's why 10 lakhs limit is not applicable. Then next one, pa. So we completed this and come back to page number 145. So 4 illustrations we completed, and already we discussed 22 subsection 1. So when a person is required to get registered based on aggregate turnover. Now when a person is not at all required to get registered, 23, exempted from registration. See that. So 3 cases, a person is not at all required to get registered. If they are exclusively making exempted supplies, or if they are exclusively making RCM supplies, means outward supply is covered under RCM, or if they are an agriculturist, so they are engaged only in supply out of cultivation of land. They are an agriculturist, they are engaged only in supply out of cultivation of land. Let that be taxable goods or exempted goods. Example, rubber. Natural rubber is taxable. Actually, it is taxable. But in Kerala, lot of people are dependent on sale of that natural rubber. They will have rubber plantation. So in that rubber plantation, they will collect the natural rubber from the trees and they will make the rubber sheets. They will rotate and they make a rubber sheet, and that they will be selling. So therefore, they are engaged only out of cultivation of land. So therefore, even though that rubber is taxable, but they are not required to get registered. Why they are not required to get registered? Because they are only an agriculturist. You understood or not? Like that, there is a groundnut crop farmer. That groundnut crop farmer gets the groundnuts, peanuts, groundnuts. So this they are selling. So they are not required to register. Now they are selling groundnuts plus crushing groundnuts to make groundnut oil, and the groundnut oil also they are selling. Now partly they are making supply out of cultivation of land and partly they are selling processed goods. So therefore they will not get this exemption. So an agriculturist is not at all required to get registered if they are only an agriculturist. When they are only an agriculturist, they should sell produce out of cultivation of land. Then only they are called as agriculturist. Then, so advocates, outward supply is always covered under RCM, correct? So whether advocate is required to get registered? No. Because if a person's outward supply is exclusively covered under RCM, they are exempted from registration. So tell me what are the 3 cases where a person is exempted from registration? Come on. Exclusively exempted, and exempted includes non-taxable. Then exclusively RCM supplies, and then agriculturist. They are exempted from registration. Then irrespective of aggregate turnover, some people are required to get registered as per section 22 and 24. First looking into 22. If you are already registered under existing law, that is old indirect taxes, under GST also you need to compulsorily register. Same way, so when a registered person transfers this business to another person, so the transferee should definitely get registered. Then transfer pursuant to scheme of amalgamation or demerger, the amalgamated company or the resulting company, even though it is a new company, but they need to get registered as and when they get the certificate of incorporation. So in these three cases, so a person is compulsorily required to get registered. But if their aggregate turnover fall below threshold limit, they can make an application for cancellation of registration. Understood? So in these three cases, concentrate pa. In these three cases, registered under earlier law should be registered under GST. Transfer of business, transferee should register. Amalgamation or merger, the amalgamated or resultant company should register. But after getting registration, if their turnover falls below threshold limit, they can make an application for cancellation of registration. But in case of section 24, once you are compulsorily required to get registered because of section 24, even though your aggregate turnover fall below threshold limit, you cannot make application for cancellation of registration. Is it clear? So that point somewhere you make note pa. So somewhere you write down, maybe this space is sufficient. Here also you can write. So what is it you need to write? Person required to get registered under 22. Person required to get registered under section 22. Person required to get registered under section 22 can make application for cancellation. Person required to get registered under section 22 can make application for cancellation. Can make application for cancellation if turnover falls below threshold limit. If turnover falls below threshold limit. However, this is not applicable in case of section 24. However, this is not applicable in case of section 24. So, if I am required to get registered under section 22, first I need to register under section 22. If my turnover is coming down below threshold limit, I can make an application for cancellation of registration. But if I am covered under section 24, even though my turnover falls below threshold limit, I cannot make application for cancellation of registration. I need to definitely get registered and I am continuing in registration only. Now, what are the cases where a person is compulsorily required to get registered under section 24? Remember a keyword, I creations. I creations. So, this I creations, they are not required to register or they should compulsorily register. They should compulsorily register. So, what is this? I, first one, interstate supply of goods. That too what goods? Taxable goods. If I am making interstate supply of exempted goods, am I compulsorily required to register? No. Interstate supply of taxable goods. What about interstate supply of services? Interstate supply of services, whether compulsory registration is applicable? No. So, interstate supply of goods, that too taxable goods. Understood? For interstate supply of services, compulsory registration not applicable. For interstate supply of exempted goods, compulsory registration not applicable. One more point, interstate supply of taxable goods other than handicrafts. Suppose if I am making interstate supply of handicrafts, am I compulsorily required to register? No. Clear here? Interstate taxable supply of goods other than handicrafts. Then C for casual taxable person. Who is a casual taxable person? Who come from other state to this state and is not having any physical place of business in this state, he is known as a casual taxable person and they will be engaged in supply of goods or services. For example, So you take cinema actors who come from other state to this state for the purpose of acting in some movies. So they will be called as casual taxable person. Then even suppose if the match tournaments and all is happening in Tamil Nadu, so IPL is coming up. So a lot of players from other states in India also will be coming here to play. So they will be called as casual taxable person. And then, so usually this festive seasons and all, lot of factory outlets they will open, garment sellers. So from north and all, they will be coming, they will bring the garments and they will sell factory outlet. They will take one marriage hall on rent and in that marriage hall they will open. So flat 50% off, flat 60% off, buy one get 9 free like that and all. So these cases are called as casual taxable person. They come from other state to this state and is not having any physical place of business in this state. For example, a CA faculty who come from other state to this state to take classes here, will they be called as casual taxable person in this state? Yes. Same way, if I go to any other state to take the classes, I will be called as a casual taxable person in that state. Is it clear or not? So every casual taxable person is compulsorily required to get registered. And then R for, but casual taxable person other than handicrafts. So this other than handicrafts is there even for interstate supply as well as casual taxable person. Usually handicraft sellers and all, handicraft goods sellers and all, they need to go to different states. In the exhibition they need to participate, trade fairs. There they will open one counter and they will display those handicraft goods and they will be selling. So that's why their sales mainly depend upon going to the other state and selling. So they are not required to compulsorily register. Then R for recipient who is liable to pay GST under RCM. Which RCM? 9.3 RCM or 9.4 RCM? 9.3 RCM only compulsory registration. Then e-commerce operator. So we discussed now 9 subsection 5, e-commerce operator. So liability to pay GST is on e-commerce operator. So that e-commerce operator is compulsorily required to get registered. Then agent making supply on behalf of principal. That is in case of principal agent transaction, I told you, when an agent is making supply on behalf of principal, if invoice is raised by agent to the buyer, or in case of purchase invoice is in the name of the agent, then agent is acting on behalf of principal and that agent is compulsorily required to get registered. Then T for TDS deductor. We have TDS concept in GST, but which is not there in syllabus, but in GST also there is TDS, and at CA final level you will learn. So that TDS deductor is also compulsorily required to get registered. Then next I, that is input service distributor. While discussing an input tax credit chapter, I told you there is a head office which will take the input tax credit and distribute the input tax credit to the branch offices. So that head office will be called as an input service distributor. So that input service distributor is also compulsorily required to get registered. O for OIDR supplier. Which OIDR supplier? Located outside India, making supply to non-taxable online recipient in India. We discussed that. Netflix, Amazon outside India, when we subscribe, we will not pay GST. That Netflix or Amazon will pay GST. They need to compulsorily required to get registered. Then N, that is NRTP. NRTP is non-resident taxable person. What is the difference between casual taxable person and non-resident taxable person? Casual taxable person will come from other state to this state in order to make supply of goods or services. But non-resident taxable person will come from outside India to India in order to make supply of goods or services. Okay. So that NRTP is also compulsorily required to get registered. And yes, that is supplier of goods through e-commerce operator. So any person who is engaged in supply of goods, not services. So because we discussed supplies through e-commerce operator, supplier of goods through e-commerce operator is only compulsorily required to get registered, but not supplier of services through e-commerce operator. So these are the cases where a person is compulsorily required to get registered. Come on, I don't see your book. I is interstate supply of taxable goods other than handicraft. C, casual taxable person other than handicrafts. R, recipient liable to pay GST under RCM. Which one? 9(3). Then E, e-commerce operator. A, agent acting on behalf of principal. T, TDS deductor. Another I, input service distributor. O, OIDR supplier located outside India making supply to non-taxable online recipient in India. N, non-resident taxable person. Then yes, supplier of goods through e-commerce operator. So these are the cases where compulsory registration is applicable. Now I will give you one peculiar situation. Say this. There is an advocate. Please concentrate, pa. There is an advocate. Advocate is making some outward supplies. Advocate is making some outward supplies, which is covered under RCM. Advocate is making some outward supplies which is covered under RCM. So who will pay GST? Recipient, business entity will pay GST. Correct? Now, advocate is having some inward supplies. Advocate is having some inward supplies, and that inward supplies is also covered under RCM. So, on this, who should pay GST? Advocate should pay GST. Now, as advocates outward supplies fully covered under RCM, they are exempted from registration under section 23. As they have inward supplies under RCM on which they need to pay GST under RCM. We have no inward supplies under RCM. Lot of things are there. So what is that? So sir, CG got salads. Big list is there. So therefore, as they have inward supply on which they need to pay GST under RCM, as per section 24, they need to compulsorily get registered. Now, which section will prevail? Section 24 or section 23? 23 will prevail. So, which means they are exempted from registration. So, even though as per section 24, they are compulsorily required to get registered, but section 23 overrides section 24, which means if they are exempted from registration, they are exempted from registration. Even though they are covered under compulsory registration, they are not required to register, because section 24 uses the word notwithstanding anything contained in section 22. They did not use the word notwithstanding anything contained in 23. That's the reason why 23 is an independent section. So 23 will override 24. And this even given in the Finance Act 2023. So recently, so March Finance Act, so February Finance Act came. So in that Finance Act, they made this amendment. So therefore, whatever we are learning is correct. But specifically, this amendment is made. Okay. So that section 23 will override section 24 like that. But for your exam also, it is applicable. It is applicable from the beginning. But there were difference in thought. And people were not agreeing, no, 24 only will prevail. For that only, government has clearly given a clarification that 23 will only override 24. So now, please make note of that information here. In section 23, you write down, section 23 overrides section 24. Somewhere here you write down, section 23 overrides, section 23 overrides section 24. Section 23 overrides section 24. So which will prevail? Section 23 only will prevail. So we completed section 22, 23 and 24. 22 who are required to get registered. 23 exempted from registration. 24 compulsory registration. Then we are moving on to section 25, that is procedure for registration. Now after these three sections, 22, 23 and 24, we have next three sections. Section 25, which talks about procedure for registration. Section 26, deemed registration. Section 27, special provisions for CTP and NRTP. Okay, these three sections are not important for case study type questions, but for practical, like this MCQs. MCQ questions, case study type questions or practical questions will not come. Mainly in MCQ it will be tested. Mainly in MCQs it will be tested. So section 25, procedure for registration. So here you see, first of all, every registered person will get a GSTIN. That GSTIN is a dash digit number, 15 digit number. In that 15 digits, first 2 digits is what? State code. Next 10 digits is permanent account number. And next one will be entity code, that is 1 if it is your first registration. And thereafter alphabet Z, constant. And last will be a checksum digit, that can be alphanumeric. So these are the 15 digits that we will have GSTIN. And a person should obtain registration in every state from where he makes taxable supply. But within the state, is registration required if you have multiple places of business? Within the state, optional. Either you can go for single registration by showing one place as your principal place of business and other place as your additional place of business. Correct? Or you can go for separate registration with respect to each place of business. Then look into the procedure for registration in page number 148. 148, you can see what are the forms involved in registration. So these forms you need to remember. Again in MCQ it will be tested. So application for registration is in which form? 1. REG1. Total 6 forms are there. You need to remember the purpose. REG1, application for registration. Once you make application, they will give an acknowledgement, that is REG2, acknowledgement. REG3, notice. Suppose if you make an application and if you have not given proper details, they will be giving notice in REG3. Then REG4, reply to the notice. REG5, rejection of application. REG6, certificate of registration. Once again, REG1, REG2, acknowledgement. REG3, notice. REG4, reply to notice. Good. REG5, rejection of application. REG6, certificate of registration. In this, all the time limits are 7 working days. That is, what is the time limit within which you will get notice from application? 7 working days. So within 7 working days, we will get notice from the date of application, or within 7 working days, we will get a certificate of registration. So once we make application for registration, either we will get a notice or we will get a certificate within 7 working days. Understood? Suppose if we get a notice, we need to give reply to the notice. What is the time limit within which we need to give reply to the notice? 7 working days. Again, after giving reply to the notice, within 7 working days, either they will give registration certificate or they will reject the application. Understood, pa? And acknowledgement will be immediate. Once you make application, immediately you will get acknowledgement. Then, what is the time limit within which a person should make application for registration? Already we studied that. Within 30 days from the date when a person is liable for registration. Then, whenever we make application for registration, we have an option called as Aadhaar authentication. We can select the Aadhaar authentication or no need to select Aadhaar authentication. Suppose, if you select Aadhaar authentication, which means, so once you submit the application REG1, then we will get a Aadhaar link. And in that Aadhaar link, we need to enter our mobile number OTP and email OTP. So once we enter that OTP, Aadhaar authentication is completed. The day when you complete the Aadhaar authentication, that date only called as the date of submission of application. Is it clear? So it is not the date when you submit the application really. So when it will be called as date of submission of application, pa? date of completion of Aadhaar authentication. So option 1, Aadhaar authentication. After submission of part B of RAG1, an authentication link will be sent. Now you need to enter the Aadhaar OTP, and once you enter Aadhaar OTP, means application is filed. From that date, within 7 working days, so you will get registration certificate, correct or not? Else, deemed registration. Are you getting? What the meaning of deemed registration? Thereafter, they cannot reject the application. So within 7 working days, either they need to give, notice, or they need to give certificate of registration. Suppose you made application for registration. Within 7 working days, neither you got a notice nor you got a certificate of registration, which means deemed registration. But we will not have number. But thereafter, they cannot reject the application. They have to grant the registration certificate. That is the meaning of deemed registration. Okay. Then, next, suppose if you fail to authenticate the OTP, what is the time limit that we have to complete the authentication? 15 days. We will have 15 days time to enter the OTP. Suppose if you fail to complete the OTP verification within 15 days, then within 15 days from the date of application, okay, so then the application is deemed to have been filed on expiry of 15 days without Aadhaar authentication. Got it? After 15 days, even though you submitted the application with authentication, as you did not complete the authentication within 15 days, on expiry of 15 days, it is deemed that you made an application after 15 days without Aadhaar authentication. Now, suppose if you make application without authentication or made application with authentication but not completed authentication within 15 days, in these two cases, they will grant registration only after conducting physical verification at the place of business. So the officer will come, will verify the premises, and then only they will give registration certificate. What is the time limit for that? 30 days. 30 days. Now, in case you make application for registration with authentication and not completed authentication within 15 days, the 30 days will be counted after 15 days. Is it clear? Which means, what is the overall period? 45 days. First 15 days, we should complete OTP, authentication. Otherwise, next 30 days, they will check the premises and they will give registration certificate. Suppose if you make application itself without authentication, from the date of application itself within 30 days, we will get. So it is not 45 days now, only 30 days. Then, suppose within the 30 days, if proper officer failed to complete the physical verification and give registration certificate, then also we have deemed registration. Now, we have deemed registration totally in 4 places. Okay. Now, so listen carefully. First, you have completed the authentication. Means you submitted the application. Within 7 working days, neither notice nor certificate of registration. Then it is deemed registration. Can you tell me what is it? Come on. Authentication completed and neither notice nor certificate of registration within 7 working days. Then it is deemed registration. Now second point. You submitted application with authentication. That is authentication completed. And you got a notice. After notice, you gave a reply to the notice. And within 7 working days, neither rejection of application nor certificate of registration. Then also deemed registration. So tell me second deemed registration. After reply to notice, neither rejection nor certificate of registration within 7 working days, then also deemed registration. Now third, you made application with authentication. Authentication not completed within 15 days. Thereafter within 30 days, they have not given registration. Then also deemed registration. Got it? Then 4, you made application without authentication. And after application within 30 days, they have not done physical verification and given registration. Then also deemed registration. Got it? 4 points you understood? So these 4 points are only called as deemed registration, which you can see in page number 150 and mark it as important for short note. Deemed registration. See that Aadhaar authentication completed, neither REG3. What is REG3? Notice. Nor REG6. Certificate within 7 working days. Then second, Aadhaar authentication completed, neither REG5. What is REG5? Rejection. Nor REG6. Certificate within 7 working days from the date of reply to notice. Then Aadhaar authentication not completed within 15 days, and so thereafter, after expiry of 15 days, within 30 days they did not grant registration, then also deemed registration. Aadhaar authentication not opted, you did not opt for Aadhaar authentication and registration is not granted within 30 days, then also deemed registration. Clear or not? So this can be given as a short note question part, deemed registration. Now look into illustration 5. So on this deemed registration, how we will get MCQs? See this. Part B filed on 25/5/2021 without selecting Aadhaar authentication. Without selecting Aadhaar authentication means what is the date for deemed registration? 30 days. Assume all days are working days. So count the 30 days and tell me. 25/5. So in May 6 days. In May 6 days. And in June 24 days. So 24 June will be taken as the 30th day. So therefore by 24 June, if they are not giving registration, then it is deemed registration. Correct? Then next, illustration 6. Part B filed on 25/5/2021 by selecting Aadhaar authentication, and such authentication is completed on 3/6, up to which date registration may be granted, failing which deemed registration. Assume all days are working days. So what is the date on which you completed authentication? 3/6. So from 3/6, what is the time limit by which you need to get registration certificate? 7 working days, assuming all days are working days. So from 3/6, 7 days is what? 10/6. So by 10/6, we need to get registration, otherwise deemed registration. Then illustration 7. Part B filed on 25/5/2021 by selecting Aadhaar authentication, but failed to complete the authentication. Okay, up to which date registration may be granted, failing which deemed to be registered. So you did not complete authentication. So overall you need to take 45 days. So count 45 days from 25/5. So 25/5 in May 6 days and in June 30 days. So what is the balance? 9 days. So therefore 9th July. By 9th July, if they are not giving registration certificate, then it is deemed to be registered. Is it clear? First 15 days for completion of authentication. Next 30 days for registration. Otherwise deemed registration. Then illustration 8. Part B filed on 25/5/2021 by selecting Aadhaar authentication. Such authentication is completed on 4/6. But officer gave a notice in REG3 on 8/6 and thereafter replied to notice in REG4 on 13/6. Up to which date registration may be granted, otherwise deemed registration. When you gave reply, 13/6. From 13/6, what is the time limit within which they need to either reject application or give registration certificate? 7 working days. Assume all days are working days, which means 26. By 26, we need to get registration, otherwise deemed registration. Okay? Clear here? Now, suppose if you make application beyond 30 days, what is the consequence? 18(1)(a) we studied. 18(1)(a). So please check 18(1)(a) in your book. 18(1)(a). 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 Availment of ITC on closing stock. So 18(1)(a), what is the heading it says? Liable to get registered and make application for registration within 30 days. Suppose if the application for registration is not made within 30 days, whether we get that 18(1)(a) benefit? No. So therefore, what is the consequence of not making application within 30 days? We cannot avail the ITC on closing stock. Also, there is one more concept called as revise the tax invoice. Revised tax invoice means, say, I am liable to get registered today and I get the registration certificate after some time, correct? Today I will not get registration certificate because whenever I am liable to get registered, thereafter I need to make application for registration within 30 days. Thereafter I will get a registration certificate. Then only I can collect GST from my customer. Got it? But until that point of time, will I make sales or not? Yes. But can I collect GST from my customer? No. But I can give a revised tax invoice for the sales made during this period. After the date I get the registration certificate, I can give a revised tax invoice and collect the GST with respect to sales made during the period liable to get registration till the date of certificate of registration. But this revised tax invoice also we cannot give if the application is not made within 30 days. So what are the two consequences of application not made within 30 days? Come on. ITC cannot be availed on closing stock and revised tax invoice cannot be issued to collect the GST. Okay. Now that is this illustration 9. Mr. A commenced business on 15/5/2021 and crossed the threshold limit on 30/6/2021. He submitted Part B of RAG1 on 25/7 by selecting other authentication and that authentication is completed on 31/7. Can Mr. A issue revised tax invoice if registration certificate is granted on 2/8/2021? Sir, when he is liable to get registered? 36. And when the authentication is completed, is it within 30 days or beyond 30 days? Beyond? As the authentication is beyond 30 days, because what should be taken as the date of application? Date of authentication will be taken as the date of application. As the authentication is completed beyond 30 days, so can they give revised tax invoice? No. And can they take ITC on closing stock? No. That is this. So what is the date of submission of application? 31/7. And which is beyond 30 days from the date on which A is liable to get registered. Therefore, they cannot give revised tax invoice and even they cannot avail ITC on closing stock. So this is the consequence of other authentication not completing on time. Then next, who are not required to do other authentication? Please come back to page number 150. So what is considered as the date of submission of application pa? The date of authentication is taken as the date of application or 15 days from the date of submission of Part B, whichever is earlier. Because within 15 days if you are not completing authentication, then also the date on which 15 days expires is date of application without authentication. Who are not required to comply with this other authentication? Not a citizen of India. Why? First of all, they will not have Aadhaar number. They are not a citizen of India. Partners other than authorized or managing partner. Why? Because authorized or managing partner will undergo authentication. That is enough. Remaining partners not required. Understood? So in a partnership firm, if there are 3 partners, not all 3 partners are required to undergo authentication. Out of these 3, any one partner will be managing partner or authorized partner. That partner alone of undergo authentication enough. So other 2 partners not required. Then members other than Karta of HUF. Why? Because Karta will undergo authentication and other members are not required to undergo authentication. Then members of any company or body corporate or entity other than authorized signatory. Why? Because authorized signatory will undergo authentication. So remaining members are not required to undergo authentication. Okay? First 4 points. Tell me. Not a citizen of India. Partners other than managing or authorized partner. Members other than Karta of a HUF. Members other than authorized signatory of any other person. Then next 4 is government and its family members. Central government, state government department, local authority, statutory body, public sector undertaking. So these are all part of government only now. So they are not required to undergo authentication. Then last, UIN holder. Who is UIN holder? UN embassy or consulate or UN agencies we discussed now. Foreign diplomatic mission. That foreign diplomatic mission located in India is exempted from payment of GST. So for them, one identification number will be given to get the refund of GST paid on inward supplies. So they are called as UIN holders. So who are UIN holder pa? UN agency, embassy or consulate. So these people are also not required to undergo authentication as they do not belong to India. So total 9 points you need to remember. Very, very important for short note. Who are not required to undergo authentication? Come on. First, not a citizen of India. So partner other than authorized or managing partner, members of HUF other than, then members of a person other than authorized signatory. Then next 4, CGSG, local authority, statutory body, public sector undertaking. Then last. So these 9 people are not required to undergo authentication. So that is about other authentication. And look into the next area, furnishing of bank details, page number 152. But these are all will be tested as MCQs here. Okay. See, I don't know whether you will be reading this separately or not. So the advantage is once you listen once in the class, thereafter you don't have to read it. Just if you revise it is enough. So because if it is coming in MCQ, so at that time directly you will be able to arrive at the answer. So that's why I am discussing everything, every point. So you might be feeling bored or you feel like, okay, why is it teaching all these things? So I am not teaching this because, I have to teach. There is a purpose. Every point which I am telling, so if not for practical question, at least in MCQ it will be useful. But whether you like or not, I want you to get minimum 38 out of 40. That is my expectation. Okay. So that's the reason why everything I am telling. Okay. So because some students, they are getting up and leaving. So therefore, if okay, fine, but tell to them that at least in the YouTube, ask them to watch it once. Okay. Because these points and all, if you are not reading and sitting in the exam hall, you will not be able to find it. That's why. Then it's okay. Anyhow, you did not pay fees. I am taking the class. But even then, you are free to go. You are free to come. You are free to go. But if you are leaving, because some business meeting or some very, very important work will be there. So who am I to stop you? You can go. But ensure that at least in the YouTube you are revising it or you are reading it once. Okay. Then furnishing of bank details. Bank details needs to be furnished. So within 45 days from the date of registration or due date of filing 3B, whichever is earlier. So listen, at the time when we make application for registration, we need to give the bank details. But we may give the bank details later also. So not mandatory that we need to give bank details at the time of application. At a later point of time also we can give. But what is the time limit within which we need to furnish the bank details? 45 days from the date when we get registration certificate or due date of filing 3B, whichever is earlier. Now, so definitely due date of 3B is only earlier. No, not necessary. For example, you see below, registration granted on 3/11/2020. So means, what is 45 days from 3/11/2020? In November, 27 days. And in December, the remaining days. That is 45 minus 27. 18. So 18 December 2020 or for November month, when you need to file 3B, 20th of December. So whichever is earlier, so 18th of December will be taken. Suppose if you get the registration on 18/11/2020, you count 45 days. In November, 12 days and in December, 30 days. So then we have 2 days in January. So 12 plus 30. sorry, December 31. So November 12 days, December 31 days. So therefore 43 days. So in January 2 days. Therefore 2nd January 2021 is 45 days. Or for November month, what is the due date of filing 3B? 20th of December, whichever is earlier. So 20th of December will be taken as the earlier date. By that time we need to furnish bank details. What will happen if the bank details are not furnished within this time? If bank details are not furnished within the time, that is one of the reason for cancellation of registration. We have something for as cancellation of registration. In that cancellation of registration, not furnishing the bank details within the time limit is one of the reason. Do not furnish bank details within the specified time is one of the reason for cancellation of registration. Is it clear? So what is the consequence of not furnishing the bank details within 45 days or due date of 3B, whichever is earlier? It leads to cancellation of our registration. Then next, what is the time limit for making application for registration? Already we studied, application for registration should be made within 30 days. Suppose if I am compulsorily required to get registered, whenever I commence a business from there within 30 days. If my aggregate turnover exceed threshold limit, as and when my aggregate turnover exceed threshold limit, from there within 30 days. Suppose if I am transferring the business within 30 days from the date of transfer. If it is amalgamation or merger, within 30 days from the date of certificate of incorporation. So all these is 30 days from the date when I am liable to get registered. But we have an exception. Only in one case, we need to make application for registration at least 5 days before commencement of business. That is CTP and NRTP. That alone you need to remember. CTP and NRTP should make application for registration at least 5 days before commencement of business. But all other cases within 30 days from the date when they are liable to get registered. So we completed section 25 and 26. 25 procedure for registration, 26 deemed registration, 27 special provisions relating to CTP and NRTP. So far, what we have learnt about CTP and NRTP, you tell me, what are the provisions we learnt for CTP and NRTP? CTP and NRTP is compulsorily required to get registered. Good. Then they need to make application for registration at least 5 days before commencement of business. Now, what is the type of registration that is granted to them? It's a temporary registration. For how many days it will be given? Up to 90 days. Means, if they are asking for 60 days, 60 days. If they are asking for 120 days, 90 days. So, first up to 90 days. Can this 90-day period be extended? Yes. It can be extended for a further period, not exceeding 90 days. Means, at a stretch, for how many days they can get registered? 180 days, not more than that. And thereafter also, if they want to continue in the business, then they need to go for a permanent registration. They cannot continue in registration as a CTP and NRTP. See that. Registration validity is maximum 90 days plus 90 days. So first, they have to make application for registration, and that application will be maximum for 90 days. On sufficient cause being shown, that can be extended for a further period not exceeding 90 days. Then, during the time when they are registered as CTP and NRTP, they have physical place of business or they don't have physical place of business? They don't have physical place of business. So, they may remove, like they may go out of that state anytime, correct? They don't have physical place of business and they will be living on a temporary place. Anytime they can vacate that place and go, correct? So then it is difficult to collect the GST from them. That's the reason why they should pay the advance tax. So means with respect to their estimated net tax liability, they need to compute how much could be my turnover and how much could be my ITC. So estimated net tax liability, they need to deposit as advance tax. This advance tax will be deposited in electronic cash ledger, will be adjusted against their liability. Still, if there is a balance in electronic cash ledger, they will get it as a refund. If there is any shortfall, they need to pay that amount. Okay, see this. A CTP NRTP shall at the time of submission of application make advance deposit of tax, and this advance deposit of tax is with respect to estimated tax liability. And suppose if the extension is sought for that extra period, again they need to pay the additional amount of tax as advance tax. And where this advance tax will be kept? Electronic cash ledger, which shall be adjusted against final liability. Got it? Then distinguishing points between CTP and NRTP. So what is the difference? CTP will come from other state to this state and is not having any physical place of business in the state, correct? So in a state or union territory where you don't have physical place of business. But NRTP, outside India to India where he don't have physical place of business or residence in India. And both should be coming to the state or India on an occasional basis. If they are regularly coming, they will not be called as CTP. NRTP means they need to get a normal registration. And CTP should do the business in the course, that is, should undertake transaction in the course or furtherance of business. But NRTP, no such requirement. CTP, as he is a person in the state, so in India, so definitely he will have a permanent account number. So using his permanent account number, he will get the registration. But NRTP is from outside India, means they will not have a permanent account number. So using their passport, registration will be granted. And CTP will make application for registration in REG1 and NRTP will make application for registration in REG9. And CTP will file a regular return, GSTR1 and GSTR3B. But non-resident taxable person, we have a special return, that is GSTR5. So maybe, so far not asked, but maybe they can ask a question, distinguish between CTP and NRTP, you need to write these points, okay. So we completed 25, 26 and 27. 25, procedure for registration. 26, deemed registration. 27, special provision for CTP and NRTP. Now, we are moving on to next three sections, that is section 28, that is amendment in registration. Section 29, cancellation of registration. Section 30, revocation of cancellation of registration. These three sections are useful for theory type questions plus MCQs, okay. So there will be some theory questions asked on this, and again in MCQs it will be useful. So first, section 28 says amendment in registration. 29, cancellation of registration. 30, revocation of cancellation of registration. Please listen once. So enough, if you are listening in the class, that is sufficient. So you don't have to read this again, okay, because it is not that much important concept and all. So section 28, amendment in registration. So when there will be amendment in registration, any change in particulars submitted at the time of registration, there will be amendment in registration. So what are those changes? What could change? Address could change, change in name, or change in the goods or services that you deal with, change in mobile number, or change in the top management, or change in email ID, change in bank account, correct? There are many changes that could happen from the time we start the business. Then in that case, all these changes divided into two, core field and non-core field. Three changes are considered as core fields. What are they? Change in name, change in address, and change in top management. These three are core fields. These three changes will happen in our registration certificate subject to approval by the proper officer. Clear? What are the three changes proper officer should approve? Change in name, change in address. Address can be principal place or additional place. Then change in top management. These three changes is subject to approval by proper officer. Apart from this, any other change, any proper officer approval required? No. By default, it will be approved. You understood? So the moment you change it, it will be changed in the portal that do not require proper officer approval. Understood, Appa? So now you need to remember what are the changes that requires proper officer approval. So 3 changes. What are they? Change in name, change in address, change in top management, that is change in managing director, change in karta, change in partners, etc. Then next, whether the change is prospective or retrospective. Prospective means what? With effect from the date they will change. Retrospective means what? Today they make a change which will have an effect from a back date. So whether the change will be prospective or retrospective, always the change will be prospective. But if the commissioner approves, retrospective amendment is possible. Generally, amendment will be prospective, but if commissioner approves, it can be retrospective. Also, one important point you need to remember, if there is any change that leads to change in permanent account number, then old registration should be cancelled and new registration should be obtained. That is, in your permanent account number, the 4th digit. So 4th digit is actually constitution. 4th digit in permanent account number is constitution. For example, you just run through your permanent account number. So it will be having P. 4th digit will be P. For a company, it will be C. For a firm, it will be F. Now, individual converted to partnership firm. Partnership firm converted to company means they need to get a new permanent account number. So, new permanent account number means, so whether they can continue with the registration? No. They need to cancel the registration and they need to make application for new registration. Then, 5th digit is actually your name first alphabet. Name first alphabet. Your first name will be there na, that first alphabet. Just run through your permanent account number. So wherein, so after P, your first name, first alphabet will be the next digit. Suppose if it is a company XYZ Motors, XYZ Motors, definitely the 5th digit will be X. Now XYZ Motors is changed to XYZ Automobiles. Change in name. Will that lead to change in permanent account number? No. So we can make amendment in registration, change in name. Suppose if XYZ Motors is changed to ABC Automobiles. Now in that case, the first name changes. So therefore we need to get a new permanent account number. Then in that case, so we cannot make amendment in registration. So we need to cancel the registration and get a new registration. Now you tell me, which will be the priority? Cancelling the old registration and getting new registration, or getting new registration and then cancelling the old registration? Which should be correct? Getting new registration and then cancelling the old registration is only correct, because if you cancel the old registration first, ITC will be lapsed. If you are getting a new registration, you can transfer the ITC and then cancel the old registration. Is it clear or not? So, first, obtain new registration. Obtain new registration. Obtain new registration. And then transfer ITC from old registration to new registration. Old registration to new registration. Transfer ITC from old registration to new registration. Then 3, cancel old registration. Cancel old registration. Obtain new registration, transfer ITC from old to new, and then cancel old registration. Then next, procedure for amendment in registration. We need to make one application for amendment in registration, that is REG 14. What is the time limit within which we need to make application for registration? Within 15 days. Within 15 days we need to make the application for amendment. Once we make application for amendment, thereafter, so within 15 working days, they will be giving a notice. When we make application, 15 days. When they give notice, 15 working days. There is a difference there, okay? 15 working days. And after notice, in REG 3, we need to give reply. Usually what is the time limit within which we need to give reply? 7 working days. So we need to give reply within 7 working days, and thereafter, after reply within 7 working days, they will take 7 working days either to pass an order or reject the application. Okay, they will reject the application within 7 working days. If they are not rejecting, they will pass the order. Understood? So what are the 3 time limits we need to remember? Application for amendment 15 days. Thereafter, notice or order within 15 working days. Notice given, reply within, and after reply, they will either reject the application or give order within. Okay, and application in REG 14. Application in REG 14. Amendment application. And remaining forms are same old forms. Notice in 3. Reply to notice 4. And rejection of application REG 5. Then look into the next area, cancellation of registration. So we completed 28, amendment in registration. Now we are moving on to 29, cancellation of registration. So when there will be cancellation of registration, total 8 situations there will be cancellation of registration, and we have some amendments in this place. First, so 3 cases, either application can be made by registered person or proper officer can initiate cancellation. Transfer or discontinuance of business. See, when you will make application for cancellation, if you transfer the business, you will make application for cancellation or discontinuance of business, or you are no longer liable to be registered. Means what? Your aggregate turnover falls below threshold limit, or there is a change in constitution of business, that is change in permanent account number, na, firm to company or individual to firm, etc. So these are the 3 cases. It is very important for theory. So they will be directly asking what are the situations where a person's registration can be cancelled. So total 8 points we need to remember. So please concentrate, listen. So there are first 3 cases where registered person can make application for cancellation or proper officer can initiate cancellation. What are those 3 cases? Come on. Transfer or discontinuance of business, change in constitution, no longer liable to be registered. Once again, transfer or discontinuance of business, change in constitution, no longer liable to be registered. Then next 5 cases, proper officer will initiate cancellation. Registered person will not make application for cancellation, but proper officer will initiate cancellation. So those 5 cases are like 2 cases related to returns. First, you are under composition scheme. You need to file an annual return. So that annual return needs to be filed within 3 months after due date. If it is not filed, so person opting for composition scheme, not filed annual return. This 3 consecutive is not there, pa. This 3 consecutive is omitted. So not filed annual return within 3 months after due date. What is the due date of annual return? April 30th. So a person opting for composition scheme is required to file annual return in GSTR 4. That GSTR 4 needs to be filed by 30th April of the succeeding financial year. By 30th April of the succeeding financial year, if we have not filed, still what is the time limit we have thereafter? 3 months. So in that 3 months, if you file, okay. If you are not filing in 3 months after due date, then that will be a reason for cancellation of registration. Then suppose if you are registered under normal scheme and you have not filed returns for 6 consecutive months or 2 consecutive quarters, okay, continuous 6 months or 2 quarters, if you have not filed normal returns, then also registration will be cancelled. So related to returns, 2 points. What are they? You are under composition scheme and you did not file annual return within 3 months after due date. Then number 2, normal scheme. You are under normal scheme. You did not file returns for continuous 6 months or 2 quarters. Then next. So you have contravened the provisions of the act or rules. So what are those contraventions of contravention of the provisions is given below. But some provisions you have contravened. Okay. Means you committed certain offences. Then you have obtained registration by fraud. Means what? You gave the fake details and you got the registration. Then you obtained voluntary registration and not commenced business within 6 months. So that is voluntarily you got registered and you should have started the business within 6 months, but you did not start business within 6 months. These are the 5 cases where proper officer will initiate cancellation. Now, total 8 points you need to remember. So what are these situations? What are the situations that leads to cancellation of registration? Come on, what are the 8 points? Number 1, transfer or discontinuance of business, change in constitution, no longer liable to be registered. Then returns, composition scheme, not file annual return within 3 months after due date. Then normal scheme, not file continuous 6 returns or 2 quarterly returns. Then contravention of provisions. Then 2 more points, fraud, registration obtained by fraud. Then you did not commence a business within 6 months after obtaining registration. So voluntary registration. These are the 8 points you need to write when you get a question. What are the situations that leads to cancellation of registration? Now another theory question is possible. What are the contravention of provisions that leads to cancellation of registration? Total 7 points are there. So these 7 points you need to write. Don't interchange and write. You will not get 1 mark also. When they are asking what are the contravention of provisions that leads to cancellation of registration, don't write 8 points. If you write those 8 points, answer is like correct, but not for this question. Okay. For the question, that answer is wrong. So therefore 1 mark also they will not give. So what are the contravention of provisions that leads to cancellation of registration? 7 points, easily we can remember. 3 wrong things. 3 wrong things, that is wrong invoice, wrong ITC, wrong address. What is the meaning of wrong invoice? You have not given the invoice with proper details. Okay. Then wrong ITC. You have not availed the ITC as per section 16, conditions for availment of ITC. Then wrong address. You are not doing business from the place where you have obtained registration. Okay. Don't write wrong invoice, wrong ITC, wrong address. You have to explain that and write. Okay. So what are the 3 wrong things, pa? Wrong invoice, wrong ITC, wrong address. Okay. Say this. Does not conduct business from the place where they have obtained registration, issues invoice in contravention of the provisions of rules, then avails ITC in contravention of section 16. That is wrong address, wrong invoice, wrong ITC. Then 3 violations. 3 violations. Number 1, violates furnishing bank details. You have to furnish the bank details, but you did not furnish the bank details. Violating the provision of furnishing the bank details. Then violates anti-profiteering provisions. Anti-profiteering means whenever you try to increase your profit by not passing on the benefit to the customer. So whenever you are not passing on the benefit to the customer by way of reduction in rate of tax. Reduction in rate of tax means what? Here previously I was selling a product which was taxable at 12%. Now the product rate has come down to 5%. Means I should have reduced the price now to my customer, but I did not reduce my price. So which means I retained the same price. Means previously 12% rate of GST, whatever was the price, now under 5% also I made the same price, because of which what will happen to my profit? My profit will increase. Suppose if my profit increases, is it genuine or not genuine? Not genuine. So then there is one authority called as anti-profiteering authority. That anti-profiteering authority will pass an order. If I violate that order, then also it will lead to cancellation of registration. So violation of furnishing bank details, violation of the provisions of anti-profiteering, and violation of Rule 86B. What is violation of Rule 86B? I have to pay 1% of my gross liability through electronic cash ledger. If I am not paying 1% of my liability through cash ledger, so then I am violating that provision. Then also it will lead to cancellation of registration. So tell me first 3 wrong things. Wrong invoice, wrong address, wrong ITC. Super. 3 violations. Violation of furnishing bank details. Violation of anti-profiteering. Violation of payment of 1% through cash ledger. Then last one more point, that is liability in GSTR1 greater than 3B for 1 or more tax periods. When it will happen? You reported more liability in GSTR1, but you paid less amount in GSTR3B. Then ITC in 3B is greater than ITC in 2B for 1 or more tax periods. When it will happen? You are taking more ITC than in 2B. So, in this case also, registration will be cancelled. These are the 7 situations that leads to cancellation of registration. Correct? No. 7 provisions which contravention of which it leads to cancellation of registration. But situations are 8 situations. Then, whenever they initiate cancellation of registration or whenever you make application for cancellation, the first thing that they will do is suspension of registration, because you make application for cancellation, not that immediately I am waiting for you only, so I will cancel, like that they will not cancel. They will ask why you want the registration to be cancelled. So you will specify a reason. My turnover is fallen below the threshold limit. Now they will check your turnover. So all these things will take a time until that point of time. So until the conclusion of cancellation proceedings, our registration will be suspended. Same way, when the officer initiate cancellation of registration, first he will give a notice, and till the time he conclude the cancellation proceedings, so the registration will be suspended. Is suspension of registration means cancellation of registration? No. Suspension of registration means temporary activity. For example, there is a police officer. That police officer has committed an offence. When police officer committed an offence, so he will be suspended from his duties. But is he still a police officer? Yes. Only when he is dismissed, he is not a police officer. Like that, whenever your registration is suspended, are you still a registered person? Yes. But you will behave like a unregistered person. The moment your registration is cancelled, you are officially called as a unregistered person. Understood or not? So, suspension of registration is mandatory or optional? Read that paragraph and tell me. Once a registered person has applied for cancellation of registration, or the proper officer seeks to cancel his registration, the proper officer may suspend his registration. May suspend his registration means it is optional. Now, suspension of registration requires any notice? No. Suspension of registration can be without affording any reasonable opportunity of being heard. Means what? Notice is required for suspension or notice is not required for suspension? Notice not required for suspension. Notice not required for suspension. Notice not required for suspension. Now, what is the period for which our registration will be suspended? Where the registered person has applied for cancellation of registration, the date he made application or the date selected in the application, whichever is later till the conclusion of cancellation proceedings. For example, I am making application today, say 31st March I am making application, and I selected 5th of April. So from when the registration will be suspended? 5th of April. Suppose if I make application today, 31st March, I selected 1st of March. Okay. So which will be the date of suspension? 31st March. So whichever is later. The date on which I make application or the date selected in application, whichever is later, till the officer conclude the cancellation proceedings, my registration will be suspended. This is when the registered person is making application for cancellation. When proper officer initiates cancellation of registration, when proper officer initiate cancellation of registration, he will specify one date. So from that date till the conclusion of cancellation proceedings, our registration is suspended with effect from a date to be determined by him, by the officer, pending the completion of cancellation proceedings. What will happen during this period of suspension? During the period of suspension, on my outward supplies, I cannot collect the GST from the customer. Means, can I give tax invoice? No. On my inward supplies, I cannot avail ITC. Means, can I file the return GSTR 3B to avail ITC? No. This is the consequences during the period of suspension. So, what are the two consequences during the period of suspension? Come on. So, we cannot give tax invoice for outward supply and we cannot file return for availment of ITC. So now, whenever you get a question on suspension of registration, you need to write these points, because already in Jan 21 they asked this question for 5 marks. So what are the things that you need to write? First, meaning of suspension of registration. Whenever a person is making application for cancellation or proper officer initiates cancellation, the proper officer may suspend the registration of a person. And registration of a person can be suspended without giving any notice. First point. Second point, period for which registration will be suspended. If application is made by registered person, from the date selected by the registered person or the date of application, whichever is later, till the conclusion of cancellation proceedings. If proper officer initiates cancellation, from the date selected by the proper officer till the conclusion of cancellation proceedings. Second point, you will write that. Third point, you will write, during the period of suspension, a registered person cannot collect GST by issuing tax invoice, cannot avail ITC by filing returns. Clear? So these are the informations that you need to write. Then next. Now there is one amendment in this place, that is, whenever the registration is suspended, during that suspended period also, I can file the returns. But for which period? Suspended period, prior period. For example, March, they have suspended my registration. Now, March month, during my registration is suspended, I should not file returns. That's what we learnt. Correct? For which period? March. But up to February, I should have filed some returns. That can I file? Yes. Now, non-filing of returns is one of the reason for cancellation of registration. Am I right? I did not file returns from previous year August to March. Okay, that is February. Previous year August to February, I did not file returns. August, September, October, November, December, Jan, February, March. So February, 7 months. So more than 6 months, I did not file returns. So what proper officer will do? Continuous 6 months I did not file returns. What they will do? They will initiate cancellation of my registration. Okay, va? Now, first step what they will do? Suspend my registration. And when they suspend my registration, in March, still I can file returns. Of which period? August, September, October, those periods, I can file return now. If I file those returns now, actually why they have suspended my registration? Because I did not file returns. If I file those returns, the suspension will be automatically revoked and no need to cancel the registration. Is it clear? This is the amendment. So, show cause notice is issued for cancellation of registration for non-filing of returns and they initiated suspension. From the date they initiated suspension till the conclusion of cancellation proceedings, if you are filing returns during this period, so when the registration is suspended, you cannot file the returns of suspension period. But which returns we are filing? Prior to the date of suspension, then automatic revocation of suspension. And suppose if I am not filing these returns, what will happen at the conclusion of cancellation proceedings? They will pass a cancellation order or they will drop the show cause notice. Suppose if they pass a cancellation order, then what should I do? Still, I can file returns. So, after cancellation order also, I can still file the returns. That is known as revocation of cancellation of registration section 30. That is, after they passed a cancellation order, I have to make an application for revocation by filing all the pending returns. You understood? So, submit application for revocation of cancellation within 30 days from the order of cancellation. This 30 days can be extended for a further period of 30 days by additional or joint commissioner, further 30 days by commissioner. So, by that time, if I make application for revocation and file all the returns, okay, up to the date of cancellation, file all the returns, then my registration will be revoked, which means I can continue in the registration. Is it clear? But I don't have to wait till that time. Even before conclusion of cancellation proceedings also I can file the return. So they will not issue cancellation order. If I miss this, then they will issue cancellation order. After cancellation order, I need to make application for revocation. What is the time limit for application for revocation? 30 days from the cancellation order, which can be extended for a further period of 30 days by additional or joint commissioner, further 30 days by commissioner. Now I made application for revocation. Before making application for revocation, what I should have done? All the pending returns should be filed. Now I made application. Thereafter, within 30 days, proper officer satisfied. They will revoke cancellation order. Means what? I will continue with the registration. Suppose if the proper officer is not satisfied, then they will give a notice. After they give a notice, I need to give reply to the notice. So what is the time limit within which I need to give reply to the notice? 7 working days. After that 7 working days when I give reply, so within 30 days from the date of reply, again proper officer satisfied, yes, they will revoke cancellation order. Otherwise they will reject application. So this procedure alone you need to remember. First what will happen? Over, we completed registration. So what will happen first? We will make application for revocation within time limit 30 days plus 30 days by additional or joint plus 30 days by commissioner. Once we make application for revocation, thereafter proper officer will take 30 days for what? Either to pass a order for revocation or to give a notice. Once he give notice, what is the time limit within which we need to give reply to the notice? 7 working days. After we give reply to the notice, again they will take 30 days for what? Either to revoke the cancellation order or rejection of application. That's it, pa. And whenever we got the revocation of registration, please listen. Before making application for revocation, we file all the pending returns. Now, from the time we make application for revocation till the time we get revocation order, some time will be there na, 30 days and all, correct? Means for that period, we have not filed returns. So that returns we need to file after revocation order within 30 days. For up to date of cancellation, I already filed returns. Now from the date of cancellation till the date of revocation of cancellation, I have to file returns after they revoke my cancellation order within 30 days. That point alone you remember. If cancellation is revoked, all returns pertaining to the period from the date of cancellation to the date of revocation of cancellation should be filed within 30 days from the date of order of revocation. And whenever we make application for cancellation and application for revocation of cancellation, Aadhaar authentication is must, because what these GST practitioners and article students are doing, suppose if they want to harass their principal, so these article students will have username and password of the client. So they will open username password of the client in the portal, they will make application for cancellation. You understood? So if the principal was not giving leave and all, they used to do this way, and they will say to the principal, sorry sir, like that. And principal will scold and it will be over in 10-20 minutes. But that principal will receive the scolding from the client. Okay. So therefore, due to that reason, many article students were doing that. That's the reason why whenever we make application for cancellation or application for revocation of cancellation, Aadhaar authentication must. So means even though portal you are going and doing, OTP will go to the mobile number of the client. Client will see the mobile number, immediately he will call. So what is this here? I did not make application for cancellation. So mainly for that reason only they brought this Aadhaar authentication there. mandatory or optional appa? Mandatory. Only for registration it is optional. But for cancellation of registration and revocation of cancellation of registration, it is mandatory. So that's it. We completed registration, and we will also look into the questions related to this. So it's a page number. Please take your practice manual. So page number 158. See this part. Lot of MCQs are there. At least MCQs we will try to complete. Listen. Page number 158. First MCQ. Mr. Z of Himachal Pradesh starts a new business and makes the following supplies in the first month. Intrastate supply of taxable goods amounting to 27 lakhs. Supply of exempted goods amounting to 11 lakhs. Interstate supply of taxable goods amounting to 1 lakh. Whether he is required to obtain registration. Sir, he is making interstate supply of taxable goods. Means compulsorily required to get registered irrespective of the threshold limit. Correct? So which is the correct option? Option C. So they are not required to register when they cross 40 lakhs because they are compulsorily required to get registered as they are making interstate taxable supplies. Then second, which of the following statements are correct? Revocation of cancellation of registration under CGST SGST Act shall be deemed to be revocation of cancellation of registration under SGST CGST Act. Correct. If you are getting cancelled under one act, you are deemed to be cancelled under other act. So correct only, true. Cancellation of registration under CGST Act shall be deemed to be cancellation of registration under other act. That is also true. So both cancellation as well as revocation of cancellation. Revocation of cancellation under one act is not deemed. No, this is wrong. Cancellation of registration under one act shall not be deemed. Wrong. So which are the correct statements? 1 and 2. So option A is the answer. Now read this carefully. Which of the following persons is required to obtain compulsory registration? Persons exclusively engaged in making intra-state supplies, tax on which is to be paid by recipient on reverse charge basis under 9(3). That is, I am making supply under RCM where recipient is liable to pay GST. My recipient. What about me? Compulsorily required to get registered? No. Exempted from registration. Not compulsorily required to get registered. Person making interstate supply of taxable services. Only in case of interstate supply of taxable goods, compulsory registration. So in this case, there is no compulsory registration. Person making supply of services through an e-commerce operator with aggregate turnover up to 20 lakhs. Sir, e-commerce operator is compulsorily required to get registered. But a person who is making supply of services through e-commerce operator is not compulsorily required to get registered. Person who make taxable supply of goods or service or both on behalf of the other person as an agent. Agent making supply on behalf of principal is compulsorily required to get registered. Then a NRTP is required to apply for registration when? At least 5 days before commencement of business. So option C is the answer. Then registration certificate granted to a casual taxable person or non-resident taxable person will be valid for 90 days from the effective date of registration. Period specified in the registration or 90 days, whichever is earlier. Why? Because the provision says up to 90 days. If they are asking for 30 days, for 30 days only it will be given. Correct or not? So number of days for which registration is granted are 90 days, whichever is earlier. Then Prem and Sons has taken GST registration on 1st January but failed to furnish GST returns for the next 6 months. So 6 months they have not filed returns. Owing to this, the proper officer cancelled its registration on 25th July and served the order of cancellation on 31st July. Now Prem and Sons want to revoke the cancellation of registration and they can file application for revocation on or before without any extension. What is the time limit within which we need to make application for revocation? 30 days from the date of cancellation order. What is the date of cancellation order? Order of cancellation is 31st July. From 31st July you count 30 days. So 30th of August, that will be taken as the answer. Then Mr. Ram, a jeweler registered under GST in Mumbai, wants to sell his jewelry in a trade expo in Delhi. So he is in Mumbai. He is going to Delhi. Which of the following statement is false? Actually, he need to get what registration in Delhi? Casual taxable person. He needs to get registration in Delhi as casual taxable person. That is true. He need to pay advance tax with respect to estimated tax liability. True. He needs to mandatorily have place of business in Delhi. False. He is not having any physical place of business. Then only he will be called as a CTP. And he need to file GSTR1 and 3B. Yes. A casual taxable person is required to file which return? GSTR1 and 3B. Then next, the person making interstate supply from Madhya Pradesh is compulsorily required to get registered under GST. Only when their turnover exceed 20 lakhs or 10 lakhs or irrespective of threshold limit. Irrespective of threshold limit. So that is irrespective of the amount of aggregate turnover in a financial year. In case of making interstate supply of taxable goods, irrespective of amount of aggregate turnover in a financial year. So actually the answer is D. It is not C. Why? Because not in all interstate supplies they are compulsorily required to get registered. They are compulsorily required to get registered only in case of interstate supply of taxable goods. So please write answer D as the answer. So write there D, not C. Then Mr. X, a casual taxable person, is not involved in making taxable supply of notified handicraft goods. Not involved in making taxable supply of notified handicraft goods. Which of the following statement is true for X, a casual taxable person? X is not required to take registration under GST under any circumstances. No, they need to take. And X is required to get registration if the aggregate turnover exceed 20 lakhs. No. They need to register when aggregate turnover exceed 40. No. They have to compulsorily get registered. CTP na, a casual taxable person other than handicrafts is compulsorily required to get registered. Then the registration certificate granted to non-resident taxable person is valid for dash days from the effective date of registration or period specified in registration, whichever is earlier. 90 days. Suppose if the answer has 180 days, if in one of the option we have 180 days, then also we will select 90 days. But maximum 180 days na sir? No, not at a time 180 days. 90 days or period specified in registration, whichever is earlier. Again they need to make application for extension. Okay. Then within how many days a person should apply for registration? What is the time limit? Within 30 days from the date they become liable to get registered. So option B. So Kalin and Sons made an application for cancellation of registration in the month of March due to closure of its business. Its application for cancellation of registration was approved on 14 September. In the given case, Kalim and Associates is. So actually they need to file a final return after cancellation of registration. This we will learn in returns chapter. I am discussing now itself. That is, we need to file one final return GSTR 10 within 3 months from the date of cancellation. That is after cancellation. Within 3 months from the date of cancellation, or order of cancellation, whichever is later, not whichever is earlier, whichever is later. So 3 months from the date of cancellation. So what is 3 months from the date of cancellation? No, date of cancellation. Its application for cancellation was approved on 14 September. Okay, so but 14 September is the order of cancellation. But when they have made application for cancellation, March, from March 3 months, April, May, June, or 14 September, whichever is later. So therefore, what is the time limit by which final return should be filed? 14 September, not 13 December. But December where from it came? 3 months from March or 14 September, whichever is later. So it is 14 September only. December from where it came? Your birthday, wa? Xylo and Company has 3 branches in Jalandhar, Amritsar and Ludhiana in the state of Punjab. So in the state of Punjab itself, in 3 places they have branches. Amritsar and Ludhiana branches are engaged in supply of garments, and Jalandhar branch is engaged in supply of shoes. Which of the following options is or are legally available for registration to Xylo and Company? They can obtain single registration for Punjab, declaring any one place as principal and other 2 as additional. Correct. This is one option. Xylo can obtain separate GST registration for each of the 3 branches. Yes. Xylo can obtain 1 registration for shoe business and 1 registration for garment. No, not like that. We don't have like that. Either single registration or separate registration with respect to each place of business. So only option 1 and 2 they have. That is option C. Either 1 or 2. What is the validity of registration certificate? Normally registration certificate granted is valid when? Valid till cancelled. There is no validity for a normal registration, valid till cancelled. Then Rama Limited has provided following information for the month of September. Intrastate outward supply 8 lakhs, interstate exempted outward supply 5 lakhs, and turnover of exported goods 10 lakhs. So whether all these 3 should be taken in aggregate turnover? Yes, exempted, taxable, exports, everything. Payment made for availing GTS service. So GTS service is RCM. So should that be taken in aggregate turnover? No. Calculate the aggregate turnover of Rama Limited. 8 plus 5 plus 10. That is 23 lakhs. Why not 23 lakh 80? Because inward supply under RCM not included in aggregate turnover. Then 16. Within how many days an application for revocation of cancellation of registration can be made? So in this given options you tell me. Within 30 days from the date of service of cancellation order. Option D is the answer. And it can be extended for a further period of 30 days and further 30 days by commissioner. So these are the MCQs we have. Mainly I told you on registration we get MCQs type of questions only. Then descriptive questions we can see tomorrow, no issue. Okay. And the agenda for tomorrow is that we will complete this descriptive questions on registration. Then I will be starting with composition scheme, invoice and time of supply, returns and payment process. Okay. Fine. Thank you. We will meet at tomorrow 7:30. Thank you.